Question 1. Mr. Jones is a resident of New Hampshire and wants to purchase a long-term care insurance policy. He is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium increases for long-term care insurance policies in New Hampshire? A. Long-term care insurance premiums in New Hampshire are guaranteed to remain level throughout the policy period. B. New Hampshire insurers are prohibited from increasing premiums on long-term care policies for policyholders aged 55 and over. C. New Hampshire requires long-term care insurers to file for approval with the state insurance department before increasing premiums. D. There are no regulations in New Hampshire regarding premium increases for long-term care insurance policies. The correct answer is C. New Hampshire requires long-term care insurers to file for approval with the state insurance department before increasing premiums. New Hampshire, like most states, requires insurers to file for approval with the state insurance department before increasing premiums on any insurance policy, including long-term care insurance. This filing allows the department to review the proposed increase and ensure it is justified based on factors such as claims experience and investment returns. While option B might be appealing to some customers, it's not a guaranteed right in New Hampshire. Options A and D are inaccurate as there are regulations in place. Reference: New Hampshire Insurance Department, Consumer Information, https://www.nh.gov/insurance/ National Association of Insurance Commissioners, NAIC, Long-Term Care Insurance, https://content.naic.org/article/consumer-insight-what-you-need-know-about-long-term-care-insurance. Question 2. Ms. Smith is a life insurance agent licensed in New Hampshire. A client asks her about the difference between a guaranteed issue life insurance policy and an evidence of insurability life insurance policy. Which of the following is the best explanation Ms. Smith can provide? A. Guaranteed issue life insurance policies offer higher death benefits than evidence of insurability policies. B. Guaranteed issue life insurance policies are available to everyone regardless of health, while evidence of insurability requires medical underwriting. C. Evidence of insurability life insurance policies are more expensive than guaranteed issue policies because they offer greater flexibility. D. Guaranteed issue life insurance policies are typically offered by the federal government, while evidence of insurability is offered by private insurers. The correct answer is B. Guaranteed issue life insurance policies are available to everyone regardless of health, while evidence of insurability requires medical underwriting. Ms. Smith should explain the key difference in underwriting. Guaranteed issue life insurance. As the name suggests, these policies are guaranteed to be issued to anyone who applies, regardless of their health condition. However, they typically come with lower death benefits and may have graded benefits in the initial years. Evidence of insurability life insurance. These policies require medical underwriting, meaning the insurer will assess the applicant's health and lifestyle habits before issuing the policy. Based on this assessment, the insurer may decline coverage, offer a policy with a higher premium, or exclude certain conditions from coverage. However, they typically offer higher death benefits and greater flexibility compared to guaranteed issue policies. Options A, C, and D contain inaccurate information about the key characteristics of each policy type. Reference: New Hampshire Insurance Department, Agent and Broker Licensing, https://www.nh.gov/insurance/producers/index.htm. Life Insurance Marketing Research Association, LIMRA, Types of Life Insurance, https://www.limra.com/n/research/insurance/. Question 3. John is a resident of New Hampshire and is considering purchasing a disability income insurance policy. He is concerned about the financial impact if he becomes disabled and unable to work. Which of the following statements is most accurate regarding disability income insurance benefits in New Hampshire? A. Disability income insurance benefits in New Hampshire are not taxable for state income tax purposes. B. There is no mandatory waiting period before benefits begin in New Hampshire for disability income insurance. C. Disability income insurance policies in New Hampshire are required to offer lifetime benefits in case of total disability. D. New Hampshire has no specific regulations regarding disability income insurance benefits. The correct answer is A. Disability income insurance benefits in New Hampshire are not taxable for state income tax purposes. While some states may tax disability income benefits, New Hampshire does not. This can be a significant financial advantage when receiving benefits. Options B, C, and D are not necessarily true across all disability income insurance policies in New Hampshire. Specific policy details like waiting periods and benefit duration will vary depending on the plan chosen. Reference: New Hampshire Department of Revenue Administration, Individual Income Tax. National Association of Insurance Commissioners, NAIC, Disability Income Insurance. Question 4. An agent licensed in New Hampshire is explaining Medicare supplement insurance policies to a client. What is the primary purpose of a Medicare supplement insurance policy, also known as Medigap? A. To replace Medicare Part A, hospital insurance, completely. B. To provide additional coverage for deductibles, co-insurance, and copays associated with original Medicare, Parts A and B. C. To act as an alternative to traditional Medicare Advantage plans, Part C. D. To cover expenses not covered by Medicare, such as long-term care or dental care. The correct answer is B. To provide additional coverage for deductibles, co-insurance, and copays associated with original Medicare, Parts A and B. Medigap policies are designed to supplement original Medicare, Parts A and B, by helping pay for costs that Medicare doesn't fully cover. This includes deductibles, co-insurance, and copays for covered services. Option A is incorrect as Medigap doesn't replace Part A entirely. While Option C offers an alternative to Part C plans, it's not the primary purpose of Medigap. Option D covers expenses outside the scope of Medigap policies. Reference: Centers for Medicare and Medicaid Services, CMS, Medicare Supplement Insurance, Medigap. https://www.medicare.gov/medigap-supplemental-insurance-plans/. Question 5. A New Hampshire consumer is shopping for individual health insurance on the state's health insurance marketplace. They are concerned about the potential for out-of-pocket costs associated with different plan options. According to the ACA's metal tiers, bronze, silver, gold, and platinum, which tier typically has the lowest monthly premiums but the highest out-of-pocket costs? A. Platinum. B. Gold. C. Silver. D. Bronze. The correct answer is D. Bronze. The ACA's metal tiers categorize health insurance plans based on the cost-sharing responsibilities between the insured and the insurer. Bronze plans generally have the lowest monthly premiums but come with the highest deductibles, co-insurance, and out-of-pocket maximums. As you move up the tiers, silver, gold, platinum, the monthly premiums increase, but the out-of-pocket costs decrease. Reference: healthcare.gov. Understanding metal tiers in the health insurance marketplace. https://www.healthcare.gov/choose-a-plan/plans-categories/. Question 6. A New Hampshire resident is considering purchasing a critical illness insurance policy. They want to understand the benefits typically offered by these policies. Which of the following is not typically covered by a critical illness insurance policy? A. Hospitalization for a covered critical illness. B. Surgery for a covered critical illness. C. Loss of income due to a covered critical illness. D. Preventative care services. The correct answer is D. Preventative care services. Critical illness insurance is designed to provide a lump sum benefit upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. This benefit can be used to help cover various expenses associated with the illness, including lost wages, additional medical costs not covered by primary health insurance, or other financial burdens. Option D. Preventative care services is typically not covered by critical illness insurance as it focuses on major illnesses requiring significant treatment. Reference: National Association of Insurance Commissioners, NAIC, Critical Illness Insurance. Question 7. An agent licensed in New Hampshire is explaining replacement of life insurance policies to a client. According to New Hampshire regulations, which of the following statements is most accurate regarding replacement of life insurance? A. The new insurer has no obligation to provide an in-person explanation of the difference between the old and new policies. B. A written notice of replacement disclosing specific details must be provided to the policyholder by the replacing insurer. C. The old policy must be completely lapsed before a new policy can be issued in New Hampshire. D. There are no specific New Hampshire regulations regarding replacement of life insurance. The correct answer is B. A written notice of replacement disclosing specific details must be provided to the policyholder by the replacing insurer. New Hampshire, like most states, has regulations in place to protect consumers during life insurance replacement. These regulations typically require a written notice of replacement disclosing details about both the old and new policies, allowing the policyholder to make an informed decision. Option A might be convenient for the insurer but is not following best practices. While lapsing the old policy might be a common practice, option C is not mandatory in all cases. Option D is inaccurate as regulations exist. Reference: National Association of Insurance Commissioners, NAIC, Life Insurance Replacement Model Regulation. New Hampshire Insurance Department, Consumer Information, https://www.nh.gov/insurance/. Question 8. A consumer in New Hampshire is looking for additional dental coverage beyond what their primary health insurance plan offers. They are considering purchasing a standalone dental insurance policy. What are some of the advantages of having a standalone dental insurance plan? A. Standalone dental plans typically cover 100% of all dental expenses after the deductible is met. B. Standalone dental plans offer more preventive care benefits compared to most health insurance plans. C. Standalone dental plans are typically more affordable than adding dental coverage to a health insurance plan. D. All of the above. The correct answer is D. All of the above. Standalone dental insurance plans can offer several advantages over relying solely on dental coverage included in a health insurance plan. Preventive care. Standalone plans often emphasize preventive care benefits such as cleanings, X-rays, and fluoride treatments, which can help prevent more serious and expensive dental problems down the road. Affordability. Standalone dental plans are typically more affordable than adding dental coverage to a comprehensive health insurance plan, especially if you don't require frequent dental services. Coverage. While not always 100% coverage, option A, standalone plans often help pay for a significant portion of covered dental procedures after the deductible is met. Reference: National Association of Dental Plans, NADP, Understanding Dental Insurance. Question 9. A New Hampshire resident is considering purchasing long-term care insurance. They are concerned about the possibility of premium increases in the future. What factors can potentially contribute to premium increases for long-term care insurance policies? A. Changes in the policyholder's health status. B. Increases in overall healthcare costs. C. Changes in the insurer's claims experience. D. All of the above. The correct answer is D. All of the above. Several factors can contribute to premium increases for long-term care insurance policies. Policyholder's health. If the policyholder's health deteriorates significantly, the insurer may increase premiums to reflect the higher risk of needing long-term care services. Overall healthcare costs. As the cost of providing long-term care services increases, insurers may need to raise premiums to maintain profitability. Claims experience. If an insurer experiences higher than expected claims payouts, they may need to raise premiums for all policyholders in that group to cover the costs. Understanding these factors can help consumers make informed decisions when purchasing long-term care insurance. Reference: National Association of Insurance Commissioners, NAIC, Long-Term Care Insurance, https://content.naic.org/article/consumer-insight-what-you-need-know-about-long-term-care-insurance. Question 10. An agent licensed in New Hampshire is explaining health insurance marketplace enrollment to a client. What is the open enrollment period for the health insurance marketplace in New Hampshire? A. Open enrollment occurs year-round in New Hampshire. B. Open enrollment typically occurs for a limited period in the fall of each year. C. Open enrollment coincides with Medicare Advantage open enrollment in the fall. D. There is no open enrollment period for the health insurance marketplace in New Hampshire. The correct answer is B. Open enrollment typically occurs for a limited period in the fall of each year. The open enrollment period, OEP, for the health insurance marketplace is a specific time window each year when anyone can apply for coverage, regardless of their health status. This allows consumers to shop for plans and potentially qualify for subsidies to help with the cost of premiums. While some states offer exceptions or extended enrollment periods, New Hampshire typically follows the standard fall OEP established by the federal government. Options A, C, and D are not accurate representations of the open enrollment period. Reference: healthcare.gov. Open enrollment period. https://www.healthcare.gov/glossary/open-enrollment-period/. Question 11. A consumer in New Hampshire is looking for health insurance and is confused by the difference between a health maintenance organization, HMO, and a preferred provider organization, PPO. How does an HMO typically differ from a PPO plan in terms of network access and cost sharing? A. HMO plans typically offer a wider network of providers with lower out-of-network coverage compared to PPO plans. B. HMO plans require a referral from a primary care physician, PCP, to see specialists, while PPO plans offer more flexibility in network access. C. HMO plans typically have lower monthly premiums but higher out-of-pocket costs compared to PPO plans. D. Both HMO and PPO plans offer the same level of network access and cost sharing. The correct answer is B. HMO plans require a referral from a primary care physician, PCP, to see specialists, while PPO plans offer more flexibility in network access. HMO and PPO plans differ in terms of network access and cost sharing. HMO, Health Maintenance Organization, HMO plans typically require a referral from a primary care physician, PCP, to see specialists within the HMO network. This gatekeeper approach helps control costs. Out-of-network coverage is often limited or non-existent. HMO plans generally have lower monthly premiums but may require higher copayments and deductibles for covered services. PPO, Preferred Provider Organization, PPO plans offer more flexibility in network access. You can see in-network providers for potentially lower costs, but you can also choose to see out-of-network providers, though typically at a higher cost. PPO plans generally have higher monthly premiums compared to HMO plans but may offer lower out-of-pocket costs if you stay within the preferred provider network. Question 12. A New Hampshire resident is considering purchasing a disability income insurance policy. They are unsure how the benefit amount is typically determined under these policies. Which of the following statements is most accurate regarding the benefit amount in disability income insurance? A. The benefit amount is a fixed dollar amount determined by the insurer, regardless of the policyholder's income. B. The benefit amount is typically a percentage of the policyholder's pre-disability income, subject to policy limits. C. The benefit amount is based on the cost of living in the policyholder's geographic location. D. The benefit amount is determined solely by the type of disability the policyholder experiences. The correct answer is B. The benefit amount is typically a percentage of the policyholder's pre-disability income, subject to policy limits. The benefit amount in disability income insurance is typically a percentage, often between 50% and 80%, of the policyholder's pre-disability income, subject to a maximum monthly benefit specified in the policy. This helps ensure a portion of their income is replaced if they become disabled and unable to work. Option A might be simpler but isn't customizable. While cost of living, option C, might be a factor for some consumers, it's not the primary determinant. The type of disability, option D, might influence some policy features but doesn't solely determine the benefit amount. Reference: National Association of Insurance Commissioners, NAIC, Disability Income Insurance. Question 13. An agent licensed in New Hampshire is explaining Medicare Part D, prescription drug coverage, to a client. What is the role of a formulary in a Medicare Part D plan? A. The formulary is a list of covered preventive care services under Medicare Part D. B. The formulary is a list of preferred drugs covered by the Medicare Part D plan, with varying tiers and cost-sharing requirements. C. The formulary is a standardized list of covered drugs for all Medicare Part D plans. D. The formulary has no impact on the cost of prescription drugs under Medicare Part D. The correct answer is B. The formulary is a list of preferred drugs covered by the Medicare Part D plan, with varying tiers and cost-sharing requirements. A formulary is a critical component of a Medicare Part D plan. It is a list of covered prescription drugs, often categorized into tiers based on cost and therapeutic class. Drugs within a tier typically have similar benefits. The formulary can impact the cost of prescription drugs depending on which tier a specific drug falls under and the plan's cost-sharing structure, deductible, copays. Option A is incorrect as preventive care is not the primary focus of Part D. Option C is not entirely accurate as formularies can vary by plan. Option D is incorrect as the formulary directly affects drug costs. Reference: Centers for Medicare and Medicaid Services, CMS, Medicare Part D, Prescription Drug Coverage, https://www.medicare.gov/part-d/. Question 14. A consumer in New Hampshire is considering purchasing a guaranteed issue life insurance policy. They are concerned about the limitations of these policies. What is a potential drawback of guaranteed issue life insurance? A. Guaranteed issue life insurance policies typically offer higher death benefits compared to other life insurance products. B. Guaranteed issue life insurance policies are guaranteed to be renewable for the policyholder's lifetime. C. Guaranteed issue life insurance policies typically have lower death benefits and may have graded benefits in the initial years. D. Guaranteed issue life insurance policies are more expensive than traditional term life insurance policies. The correct answer is C. Guaranteed issue life insurance policies typically have lower death benefits and may have graded benefits in the initial years. The primary advantage of guaranteed issue life insurance is that anyone can qualify regardless of health conditions. However, there are potential drawbacks. Lower death benefits. Guaranteed issue policies typically offer lower death benefit amounts compared to traditional term life insurance that requires medical underwriting. Graded benefits. Some guaranteed issue policies may have graded benefits, meaning the death benefit payout is lower in the initial years of the policy and gradually increases over time. This can be a disadvantage if the policyholder dies prematurely. Options A, B, and D are not necessarily true for all guaranteed issue life insurance policies. Reference: Life Insurance Marketing Research Association, LIMRA, Types of Life Insurance. Question 15. A resident of New Hampshire is nearing retirement and is considering different options for health insurance coverage after they leave their employer-sponsored plan. They are aware of Medicare but are unsure about the different parts and how they work together. Which of the following statements most accurately describes the coordination between Medicare Part A, hospital insurance, and Medicare Part B, medical insurance? A. Part A covers all costs associated with a hospital stay, and Part B covers any additional expenses incurred after discharge. B. Part B acts as a secondary payer to Part A, covering deductibles and coinsurance for inpatient hospital care. C. Enrollment in both Part A and Part B is mandatory for all retirees eligible for Medicare. D. Part A covers preventive care services, while Part B covers medically necessary doctor visits and outpatient care. The correct answer is B. Part B acts as a secondary payer to Part A, covering deductibles and coinsurance for inpatient hospital care. Medicare Part A and Part B work together to provide hospital insurance, Part A, and medical insurance, Part B, for covered expenses. However, they don't cover all costs. Part A, hospital insurance, covers inpatient hospital stays, skilled nursing facility care, for short stays, hospice care, and some home healthcare services. It typically has a deductible for each benefit period. Part B, medical insurance, covers doctor visits, outpatient care, certain preventive services, durable medical equipment, and some home healthcare services. Part B has a monthly premium and typically requires copayments or coinsurance for covered services. Part B often acts as a secondary payer to Part A, meaning it helps cover remaining costs, deductible, coinsurance, associated with a hospital stay covered by Part A. Option C is not mandatory for everyone. Option D clarifies some services covered by each part but not the specific coordination. Reference: Centers for Medicare and Medicaid Services, CMS, Medicare Parts A and B. Question 16. An agent licensed in New Hampshire is explaining accident insurance to a client. What is a typical characteristic of accident insurance benefits? A. Accident insurance benefits are designed to replace lost income due to an accident. B. Accident insurance benefits are paid regardless of whether the accident results in a medical injury. C. Accident insurance benefits are a form of long-term care insurance designed to cover custodial care needs. D. Accident insurance benefits are integrated with and cannot be purchased separately from a health insurance plan. The correct answer is B. Accident insurance benefits are paid regardless of whether the accident results in a medical injury. Accident insurance is a limited benefit health insurance product that provides a lump sum payment or per diem benefit in the event of an accidental injury. The key point is that the benefit is triggered by the accident itself, regardless of the severity of the injury. Option A might be a desired outcome, but not the core function. Accident insurance is separate from health insurance, Option D, and long-term care insurance, Option C. Reference: National Association of Insurance Commissioners, NAIC, Accident Insurance. Question 17. A New Hampshire resident is considering purchasing a cancer insurance policy. They want to understand the benefits typically offered by these policies. Which of the following is typically not a benefit offered by a cancer insurance policy? A. Lump sum benefit upon diagnosis of a covered cancer. B. Coverage for specific treatment costs associated with cancer. C. Disability income benefits if unable to work due to cancer. D. Reimbursement for out-of-pocket medical expenses related to cancer. The correct answer is C. Disability income benefits if unable to work due to cancer. Cancer insurance is a limited benefit health insurance product designed to provide financial assistance specifically for cancer diagnosis and treatment. It typically offers benefits like lump sum benefit, A one-time cash payment upon diagnosis of a covered cancer, regardless of treatment costs. Coverage for specific treatment costs may help cover some or all of the costs associated with cancer treatment, such as surgery, chemotherapy, and radiation therapy. Option B. Reimbursement for out-of-pocket expenses may help reimburse the policyholder for out-of-pocket medical expenses related to cancer treatment, such as deductibles and coinsurance. Option D. Cancer insurance typically does not offer disability income benefits. Option C, which is a separate insurance product designed to replace lost income due to illness or injury. Reference: National Association of Insurance Commissioners, NAIC, Cancer Insurance. Question 18. An agent licensed in New Hampshire is explaining mandated benefits to a client considering a small group health insurance plan, 2 to 50 employees. According to New Hampshire regulations, are there any specific mandated health benefits that must be included in all small group health insurance plans? A. New Hampshire does not mandate any specific health benefits for small group health insurance plans. B. All small group health insurance plans in New Hampshire must cover preventive care services. C. Small group health insurance plans must offer the same level of benefits as individual health insurance plans. D. Mandated benefits for small group plans vary depending on the number of employees covered. The correct answer is A. New Hampshire does not mandate any specific health benefits for small group health insurance plans. While some states mandate certain health benefits for small group health insurance plans, New Hampshire does not. This allows for more flexibility in plan design and pricing for employers and insurers. However, federal mandates, such as the ACA's essential health benefits, still apply. Option B might be a common benefit but not mandated in NH. Options C and D are not accurate either. Reference: New Hampshire Insurance Department, Health Insurance, https://www.nh.gov/insurance/consumers/health.htm. Centers for Medicare and Medicaid Services, CMS, Essential Health Benefits. Question 19. Mr. Jones is a resident of New Hampshire and wants to purchase a long-term care insurance policy. He is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium increases for long-term care insurance policies in New Hampshire? A. Long-term care insurance premiums in New Hampshire are guaranteed to remain level throughout the policy period. B. New Hampshire insurers are prohibited from increasing premiums on long-term care insurance policies for policyholders over a certain age. C. Insurers in New Hampshire can only increase premiums for long-term care policies with prior approval from the state insurance department. D. Long-term care insurance policies in New Hampshire are subject to rate filings, which means insurers can request premium increases but must justify them to the state. The correct answer is D. Long-term care insurance policies in New Hampshire are subject to rate filings, which means insurers can request premium increases but must justify them to the state. New Hampshire follows a rate filing system for long-term care insurance. This means insurers can request premium increases, but they must file a justification with the state insurance department. The department reviews the filing to ensure it is reasonable and in accordance with actuarial data. This helps protect policyholders from arbitrary premium increases but doesn't guarantee premiums will never change. Question 20. Mrs. Smith is a life insurance agent licensed in New Hampshire. A client asks her about the difference between a guaranteed issue life insurance policy and an evidence of insurability life insurance policy. How should Mrs. Smith respond? A. Guaranteed issue life insurance policies offer higher death benefits than evidence of insurability policies. B. Guaranteed issue life insurance policies are available to everyone regardless of health, while evidence of insurability requires medical underwriting. C. Evidence of insurability life insurance policies are more expensive than guaranteed issue policies because of medical underwriting. D. Guaranteed issue life insurance offers lifetime coverage, while evidence of insurability policies have a limited term. The correct answer is B. Guaranteed issue life insurance policies are available to everyone regardless of health, while evidence of insurability requires medical underwriting. In New Hampshire, guaranteed issue life insurance policies are available to all applicants, regardless of their health status. These policies typically have lower death benefits and may have graded benefits during the initial years. Evidence of insurability life insurance requires medical underwriting, meaning the insurer will assess the applicant's health before issuing the policy. These policies typically offer higher death benefits and may be more affordable in the long run for healthy individuals. Question 21. An agent is marketing a Medicare supplement policy in New Hampshire. The client asks if the policy covers prescription drugs. What should the agent explain to the client? A. Medicare supplement policies in New Hampshire are required to cover all prescription drugs. B. Some Medicare supplement policies in New Hampshire may offer limited prescription drug coverage, but it is not mandatory. C. Medicare supplement policies cannot cover prescription drugs because that is the role of Medicare Part D. The agent cannot answer this question and should recommend the client consult with Medicare directly. The correct answer is C. Medicare supplement policies cannot cover prescription drugs because that is the role of Medicare Part D. Medicare supplement policies, Medigap, are designed to help with out-of-pocket costs associated with original Medicare, Parts A and B. These policies do not cover prescription drugs. Prescription drug coverage is available through a separate Medicare Part D plan. The agent should explain that the client may need to enroll in a separate Part D plan to cover their prescription drug needs. Question 22. A New Hampshire resident is considering purchasing a health insurance policy with a high deductible. They are concerned about the potential out-of-pocket costs before the deductible is met. According to New Hampshire regulations, which of the following statements is true regarding health insurance plans with deductibles? A. New Hampshire mandates all health insurance plans must include a minimum deductible amount. B. There is no maximum limit on deductibles for health insurance plans offered in New Hampshire. C. Insurers in New Hampshire cannot offer health plans with deductibles exceeding a certain threshold set by the state. D. Health insurance plans with higher deductibles must come with lower premiums in New Hampshire. The correct answer is D. Health insurance plans with higher deductibles must come with lower premiums in New Hampshire. New Hampshire does not mandate minimum or maximum deductibles for health insurance plans. However, there is a federal requirement under the Affordable Care Act that health plans offered on the individual marketplace must meet minimum essential health benefits standards. This indirectly impacts deductibles because some preventive services must be covered with no deductible by these plans. Generally, plans with higher deductibles will have lower premiums, but consumers should carefully consider their expected healthcare needs and risk tolerance when choosing a plan with a high deductible. Question 23. An agent is explaining disability income insurance to a client in New Hampshire. The client asks how long they would receive benefits if they become disabled. What factors would the agent most likely consider when explaining the benefit period? A. The client's age and occupation are the primary factors determining the benefit period. B. The specific disability income insurance policy wording defines the benefit period. C. New Hampshire law mandates a minimum and maximum benefit period for all disability income policies. D. The client's preferred benefit period can be negotiated with the insurance company. The correct answer is B. The specific disability income insurance policy wording defines the benefit period. The specific benefit period for a disability income insurance policy is defined within the policy itself. Different policies may offer benefit periods ranging from 2 years to own occupation until age 65 or another specified age. The agent should explain the specific benefit period options available in the policy being offered and how they relate to the client's needs and income. Question 24. A life insurance agent in New Hampshire is contacted by a potential client who wants to purchase a life insurance policy on their grandchild. Can the agent recommend a life insurance policy in this situation? A. Yes, New Hampshire allows life insurance policies to be purchased on grandchildren with the grandparent as the beneficiary. B. No, New Hampshire law prohibits life insurance policies on minors without a demonstrable insurable interest. C. The agent can recommend a life insurance policy, but only if the grandchild is named as the beneficiary. D. The agent needs to clarify the grandchild's age. New Hampshire has different rules for minors and adults. The correct answer is B. No, New Hampshire law prohibits life insurance policies on minors without a demonstrable insurable interest. In New Hampshire, an applicant for life insurance must have an insurable interest in the insured's life. This means the applicant would suffer a financial loss upon the death of the insured. Generally, a grandparent does not have an insurable interest in their grandchild's life. Therefore, the agent cannot recommend a life insurance policy in this situation. Question 25. Ms. Lee is a resident of New Hampshire and is considering enrolling in a health maintenance organization (HMO) plan. She is concerned about choice and flexibility in selecting healthcare providers. How should an agent explain the structure of HMO plans in New Hampshire? A. HMO plans in New Hampshire offer a wide network of providers, allowing Ms. Lee to choose any doctor she prefers. B. HMO plans require Ms. Lee to select a primary care physician, PCP, who coordinates all her medical care. C. While HMO plans have a network of providers, Ms. Lee can still see out-of-network providers for an additional cost. D. HMO plans are not available in New Hampshire. The correct answer is B. HMO plans require Ms. Lee to select a primary care physician, PCP, who coordinates all her medical care. HMO, Health Maintenance Organization, plans typically require enrollees to choose a primary care physician, PCP, who coordinates their care and provides referrals to specialists within the HMO network. This approach helps control costs but may limit Ms. Lee's choice of providers compared to a PPO, Preferred Provider Organization, plan. Question 26. An agent is explaining Medicare Advantage plans to a client in New Hampshire. The client asks if they can still keep their current Medicare supplement plan, Medigap, if they enroll in a Medicare Advantage plan. A. Yes, clients in New Hampshire can keep their Medigap plan alongside a Medicare Advantage plan. B. No, Medicare Advantage plans are an alternative to Original Medicare, Parts A and B, and Medigap plans supplement Original Medicare. C. The client can keep their Medigap plan, but it may become less beneficial with a Medicare Advantage plan. D. The agent cannot answer this question and should recommend the client consult with Medicare directly. The correct answer is B. No, Medicare Advantage plans are an alternative to Original Medicare, Parts A and B, and Medigap plans supplement Original Medicare. Medicare Advantage plans, Part C, are an alternative to Original Medicare, Parts A and B. They are offered by private insurance companies and typically provide all benefits covered by Original Medicare, plus additional benefits like vision or dental coverage. Clients cannot have both a Medicare Advantage plan and a Medigap plan, as Medigap plans supplement Original Medicare benefits. Question 27. A life insurance agent is contacted by a potential client in New Hampshire who wants to purchase a Variable Universal Life Insurance (VUL) policy. The client is interested in the potential for investment growth alongside life insurance protection. What should the agent explain to the client regarding the investment risks associated with VUL policies? A. VUL policies in New Hampshire guarantee a minimum investment return alongside the death benefit. B. The client's premiums in a VUL policy are invested in subaccounts that carry no investment risk. C. The death benefit in a VUL policy is fixed, but the cash value can fluctuate based on the performance of the chosen subaccounts. D. VUL policies are complex financial products, and the agent should recommend the client consult with a financial advisor before purchasing. The correct answer is D. VUL policies are complex financial products, and the agent should recommend the client consult with a financial advisor before purchasing. VUL policies are complex financial products that combine life insurance protection with investment features. The cash value in a VUL policy grows based on the performance of the chosen subaccounts, which are similar to mutual funds. This means the cash value can fluctuate and there is a risk of loss. The agent should explain these investment risks to the client and recommend they consult with a financial advisor to ensure a VUL policy is suitable for their financial goals and risk tolerance. Question 28. Ms. Garcia is a resident of New Hampshire and is considering applying for a long-term care insurance policy. She is concerned about the possibility of being denied coverage due to a pre-existing health condition. What does New Hampshire law say about pre-existing condition exclusions for long-term care insurance? A. Long-term care insurers in New Hampshire can deny coverage based on any pre-existing health condition. B. New Hampshire law prohibits insurers from denying long-term care coverage solely due to pre-existing conditions. C. Insurers can deny coverage in New Hampshire, but only if the pre-existing condition is likely to require long-term care soon. D. Pre-existing condition exclusions for long-term care insurance are not regulated in New Hampshire. The correct answer is B. New Hampshire law prohibits insurers from denying long-term care coverage solely due to pre-existing conditions. The National Long-Term Care Insurance Act, LTCI Act, applies to all states, including New Hampshire. This law prohibits insurers from denying long-term care coverage or charging higher premiums based solely on pre-existing health conditions. However, insurers can ask applicants health questions to assess their risk and determine if they qualify for coverage. Question 29. An agent is explaining accident insurance to a client in New Hampshire. The client asks if accident insurance covers injuries sustained while playing a specific sport, like skiing. How should the agent respond? A. Accident insurance policies in New Hampshire typically cover all accidental injuries, regardless of the activity that caused them. B. Some accident insurance policies in New Hampshire exclude coverage for high-risk activities like skiing, while others may offer optional coverage for such activities. C. Accident insurance policies only cover injuries resulting from accidents that occur on public property in New Hampshire. D. The agent cannot answer this question and should recommend the client consult with the specific insurance company for policy details. The correct answer is B. Some accident insurance policies in New Hampshire exclude coverage for high-risk activities like skiing, while others may offer optional coverage for such activities. Accident insurance policies typically cover accidental injuries, but there may be exclusions for certain activities considered high risk, such as extreme sports or participation in professional athletics. In New Hampshire, specific policy language determines coverage for activities like skiing. The agent should explain that the client needs to review the specific policy wording to understand what activities are covered or excluded. Question 30. Mr. Khan is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a life insurance policy with a graded death benefit in the first few years. How should Mr. Khan explain graded death benefits to the client? A. Graded death benefits in New Hampshire life insurance policies pay out a reduced benefit if the death is accidental. B. Graded death benefits in New Hampshire offer a higher death benefit in the initial years, then level off to a standard benefit amount. C. Life insurance policies with graded death benefits are typically more expensive than policies with a level death benefit in New Hampshire. D. Graded death benefits are not available in life insurance policies offered in New Hampshire. The correct answer is B. Graded death benefits in New Hampshire offer a higher death benefit in the initial years, then level off to a standard benefit amount. A graded death benefit is a feature sometimes offered in life insurance policies, particularly those issued in the first few years of coverage. In these policies, the death benefit payout is lower in the initial years, often referred to as the graded period, and then increases to the face amount of the policy after a specified period. This feature can be beneficial for situations where the need for a high death benefit is greater in the early years, e.g., to cover outstanding debts, but less so later in life. Mr. Khan should explain the specific graded benefit provisions of the policy being offered and how they would impact the death benefit payout. Question 31. Ms. Brown is a resident of New Hampshire and is considering applying for a health insurance policy on the individual marketplace. She is concerned about the potential for premium increases in the future. According to the Affordable Care Act, ACA, can health insurance issuers in New Hampshire deny coverage renewal or increase premiums based on an individual's health status? A. Yes, health insurance issuers in New Hampshire can deny coverage renewal or increase premiums based on health status. B. No. Under the ACA, health insurers cannot deny coverage renewal or increase premiums based on health status. C. Health insurers in New Hampshire can only increase premiums based on age, tobacco use, and location. D. The ACA only applies to employer-sponsored health plans, not individual plans offered on the marketplace in New Hampshire. The correct answer is B. No. Under the ACA, health insurers cannot deny coverage renewal or increase premiums based on health status. The Affordable Care Act, ACA, introduced guaranteed issue and community rating for health insurance plans offered on the individual marketplace. This means that health insurers cannot deny coverage renewal or increase premiums based on an individual's health status, past medical history, or claims history. However, insurers can vary premiums based on factors like age, tobacco use, and location, county, as permitted under the ACA. Question 32. Ms. Davis is a resident of New Hampshire and is considering enrolling in a short-term health insurance plan. She understands these plans have limitations compared to comprehensive health insurance. According to New Hampshire regulations, what is the maximum allowable duration of coverage for a short-term health insurance plan? A. Short-term health insurance plans in New Hampshire can cover an individual for an unlimited period. B. The maximum coverage period for short-term health plans in New Hampshire is 3 months. C. Short-term health insurance plans in New Hampshire can cover an individual for up to 1 year. D. The maximum coverage period for short-term health plans is determined by the issuing insurance company in New Hampshire. The correct answer is C. Short-term health insurance plans in New Hampshire can cover an individual for up to 1 year. Short-term health insurance plans are a temporary health insurance option intended to bridge gaps in coverage or provide limited coverage for individuals who may not qualify for a comprehensive health plan due to factors like waiting periods. Federal regulations limit the maximum coverage period for short-term health plans to a period of 12 months per enrollee, with a possible one-time renewal for an additional 12 months. New Hampshire follows these federal guidelines. Question 33. An agent is explaining critical illness insurance to a client in New Hampshire. The client asks how the policy defines a critical illness. How should the agent respond? A. Critical illness insurance policies in New Hampshire have a standardized definition of critical illnesses covered by the policy. B. The specific critical illnesses covered by the policy are determined by the state of residence, so the agent should recommend the client consult with the New Hampshire Department of Insurance. C. The definition of critical illnesses covered by a critical illness insurance policy will vary depending on the specific policy language. D. Critical illness insurance policies only cover illnesses requiring hospitalization in New Hampshire. The correct answer is C. The definition of critical illnesses covered by a critical illness insurance policy will vary depending on the specific policy language. Critical illness insurance policies are designed to provide a lump sum cash benefit if the insured is diagnosed with a covered critical illness. There is no national standard definition for critical illnesses covered by these policies. The specific illnesses covered, claim requirements, and benefit payouts will vary depending on the insurance company and the specific policy wording. The agent should explain that the client needs to carefully review the policy details to understand which critical illnesses are covered and the specific claim process. Question 34. Mr. Lopez is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a life insurance policy with a disappearing premium benefit. How should Mr. Lopez explain disappearing premiums to the client? A. Disappearing premium life insurance policies in New Hampshire offer a reduced premium after a set period, but the death benefit also decreases. B. Disappearing premium life insurance policies gradually reduce the premium payments over time until the policy is fully paid up in New Hampshire. C. Life insurance policies with disappearing premiums are not available in New Hampshire. D. Disappearing premium life insurance policies require a larger initial premium payment in New Hampshire, but then future premiums are waived. The correct answer is B. Disappearing premium life insurance policies gradually reduce the premium payments over time until the policy is fully paid up in New Hampshire. Disappearing premium whole life insurance is a type of life insurance policy designed to pay for itself over time. The initial premiums are typically higher than a standard whole life policy, but the premiums gradually decrease over time until the policy is fully paid up. At that point, the policy remains in force with no further premium payments required, and the cash value continues to grow. Mr. Lopez should explain the specific features of the disappearing premium policy being offered and how the premiums and cash value will accumulate over time. Question 35. Ms. Young is a resident of New Hampshire and is considering a Medicare supplement, Medigap, policy to help cover her out-of-pocket costs under Original Medicare, Parts A and B. She is concerned about guaranteed access to these plans if she decides to enroll later. Does New Hampshire have any guaranteed issuance rights for Medigap policies? A. Guaranteed issuance for Medigap plans is not mandated in New Hampshire. Insurers can deny coverage based on health status during open enrollment periods. B. Anyone enrolled in Original Medicare in New Hampshire has guaranteed access to any Medigap plan they choose, regardless of health status. C. Guaranteed issuance for Medigap plans only applies to individuals who are already enrolled in a Medigap plan and want to switch to a different plan. D. New Hampshire offers a guaranteed issuance period for Medigap plans following job loss or involuntary loss of other health insurance coverage. The correct answer is D. New Hampshire offers a guaranteed issuance period for Medigap plans following job loss or involuntary loss of other health insurance coverage. Guaranteed issuance for Medigap plans is not federally mandated, but some states have adopted additional consumer protections. New Hampshire follows the federal guidelines with some exceptions. One exception is guaranteed issuance for Medigap plans following certain qualifying events, such as job loss or involuntary loss of other health insurance coverage. During these guaranteed issuance periods, insurers cannot deny or condition coverage based on health status. Question 36. An agent is explaining long-term care insurance benefits to a client in New Hampshire. The client asks if home health care services are covered under the policy. How should the agent respond? A. Home health care services are never covered by long-term care insurance policies in New Hampshire. B. Most long-term care insurance policies in New Hampshire offer coverage for home health care services, but some may have limitations. C. Long-term care insurance policies in New Hampshire only cover facility-based care, such as nursing homes. D. The agent cannot answer this question definitively and should recommend the client consult with the specific insurance company for policy details. The correct answer is B. Most long-term care insurance policies in New Hampshire offer coverage for home health care services, but some may have limitations. Long-term care insurance policies typically cover a range of services intended to help policyholders with activities of daily living, ADLs, due to illness or disability. This can include assistance with bathing, dressing, eating, toileting, and transferring. Home health care services can be an essential part of a long-term care plan, and many long-term care insurance policies in New Hampshire will cover these services, either at home or in a facility setting. However, the agent should explain that specific policy provisions regarding home health care coverage, such as daily or lifetime maximums, can vary depending on the policy. Question 37. Ms. Patel is a life insurance agent licensed in New Hampshire. A client inquires about the difference between a term life insurance policy and a whole life insurance policy. How should Ms. Patel explain the key differences to the client? A. Term life insurance offers guaranteed lifetime coverage in New Hampshire, while whole life offers coverage for a set period. B. Whole life insurance policies in New Hampshire accumulate a cash value, while term life policies typically do not. C. Term life insurance is typically more expensive than whole life insurance in New Hampshire. D. There is no difference between term and whole life insurance. They are just different marketing terms for the same product. The correct answer is B. Whole life insurance policies in New Hampshire accumulate a cash value, while term life policies typically do not. Term life insurance provides coverage for a specific period, term, such as 10, 20, or 30 years. If the insured dies within the term, the death benefit is paid to the beneficiary. Term life policies typically have lower premiums compared to whole life insurance. Whole life insurance offers lifetime coverage, as long as premiums are paid. In addition to a death benefit, whole life policies accumulate a cash value over time. This cash value can be accessed through loans or withdrawals. Ms. Patel should explain these key differences in coverage and premium structure to help the client decide which type of life insurance best meets their needs. Question 38. Mr. Jones is a resident of New Hampshire and is considering applying for a disability income insurance policy. He is concerned about the financial impact if his claim is denied. What resources are available to Mr. Jones in New Hampshire if he disagrees with a disability insurance claim denial? A. Mr. Jones can only appeal a disability insurance claim denial directly with the insurance company in New Hampshire. B. New Hampshire has an independent agency specifically for handling disability insurance claim appeals. C. He can file a complaint with the New Hampshire Department of Insurance, but this won't guarantee a successful appeal of the claim denial. D. Mr. Jones has the option to pursue legal action against the insurance company in New Hampshire. The correct answer is C. He can file a complaint with the New Hampshire Department of Insurance, but this won't guarantee a successful appeal of the claim denial. While some states have established independent agencies to handle disability insurance claim appeals, New Hampshire does not. However, Mr. Jones does have some options if he disagrees with a claim denial. He can file an appeal directly with the insurance company following their internal appeals process. Additionally, he can file a complaint with the New Hampshire Department of Insurance. The department can investigate the claim denial and may advocate on his behalf with the insurance company. Finally, Mr. Jones has the right to pursue legal action against the insurance company, but this can be a complex and expensive process. Question 39. An agent is explaining Medicare Part D prescription drug coverage to a client in New Hampshire. The client asks if there are any financial assistance programs available to help with the cost of prescription drugs. A. There are no federal or state-funded prescription drug assistance programs available in New Hampshire. B. Some Medicare Part D plans offer built-in assistance programs to help with medication costs for low-income beneficiaries. C. Clients can apply for extra help through the Social Security Administration to offset prescription drug costs in New Hampshire. D. Financial assistance for prescription drugs is only available to individuals on Medicaid in New Hampshire. The correct answer is C. Clients can apply for extra help through the Social Security Administration to offset prescription drug costs in New Hampshire. The federal government offers the Extra Help program to help low-income beneficiaries pay for prescription drugs covered under Medicare Part D plans. Eligibility for extra help is based on income and resources. Clients can screen for the Extra Help program through the Social Security Administration or online resources. The agent should explain that some Medicare Part D plans may also offer additional benefits or discounts on certain medications. Question 40. Ms. Garcia is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a variable universal life insurance (VUL) policy. The client is interested in the potential for higher returns, but also understands there are risks involved. How should Ms. Garcia explain the concept of risk tolerance when discussing VUL policies? A. Risk tolerance refers to the client's age and health status, which are key factors in determining VUL policy eligibility in New Hampshire. B. Risk tolerance reflects the client's comfort level with potential investment losses associated with the variable subaccounts in a VUL policy. C. Since VUL policies offer guaranteed death benefits, risk tolerance is not a relevant factor for these policies. D. Ms. Garcia should recommend the client consult with a financial advisor to discuss risk tolerance before considering a VUL policy. The correct answer is B. Risk tolerance reflects the client's comfort level with potential investment losses associated with the variable subaccounts in a VUL policy. Variable Universal Life Insurance (VUL) combines life insurance protection with investment features. The cash value in a VUL policy grows based on the performance of the chosen subaccounts, which are similar to mutual funds. This means the cash value can fluctuate and there is a risk of loss. Risk tolerance refers to an investor's comfort level with potential investment losses. Ms. Garcia should explain that VUL policies can be a suitable option for some clients, but they are not appropriate for everyone. Clients with a low risk tolerance may be better suited for a product with a guaranteed cash value, such as a traditional whole life insurance policy. She should recommend the client carefully consider their risk tolerance and investment goals before deciding on a VUL policy. D. Is also a good recommendation, as consulting a financial advisor is always a wise step before purchasing complex financial products. Question 41. Mr. Khan is a resident of New Hampshire and is considering enrolling in a health maintenance organization (HMO) plan. He understands that HMO plans typically require choosing a primary care physician (PCP). Mr. Khan also wants to know if he can still see specialists if needed. A. HMO plans in New Hampshire strictly limit access to specialists and require a referral from the PCP for any specialist care. B. While an HMO plan requires a PCP, some plans may allow direct access to certain specialists without a referral in New Hampshire. C. Clients enrolled in HMO plans in New Hampshire can see any specialist they choose, but may face higher out-of-network costs. D. HMO plans typically cover specialist care only if the PCP deems it medically necessary in New Hampshire. The correct answer is D. HMO plans typically cover specialist care only if the PCP deems it medically necessary in New Hampshire. HMO, Health Maintenance Organization, plans typically require enrollees to choose a PCP who coordinates their care and provides referrals to specialists within the HMO network. This approach helps control costs but may limit Mr. Khan's choice of providers compared to a PPO, Preferred Provider Organization, plan. However, the key point is that HMO plans typically cover specialist care if the PCP deems it medically necessary. The PCP acts as a gatekeeper, ensuring appropriate utilization of specialist services. Question 42. An agent is explaining accident insurance to a client in New Hampshire. The client asks if the policy covers injuries sustained while participating in extreme sports, such as skydiving. How should the agent respond? A. Accident insurance policies in New Hampshire typically cover all accidental injuries, regardless of the activity that caused them. B. Most accident insurance policies in New Hampshire exclude coverage for high-risk activities like skydiving, but some may offer optional coverage. C. The agent cannot answer this question definitively and should recommend the client consult with the specific insurance company for policy details. D. Accident insurance policies in New Hampshire only cover injuries resulting from accidents that occur within the state. The correct answer is B. Most accident insurance policies in New Hampshire exclude coverage for high-risk activities like skydiving, but some may offer optional coverage. Accident insurance policies typically cover accidental injuries, but there may be exclusions for certain activities considered high risk, such as skydiving, bungee jumping, or participation in professional athletics. Specific policy language determines coverage for these activities. The agent should explain that accident insurance policies in New Hampshire can vary in their exclusions, and the client should carefully review the policy details to understand what activities are covered or excluded. Question 43. Ms. Hernandez is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a life insurance policy with a guaranteed insurability rider. How should Ms. Hernandez explain guaranteed insurability riders to the client? A. Guaranteed insurability riders allow the policyholder to increase their death benefit at any time without medical underwriting in New Hampshire. B. These riders guarantee the policy will remain in force even if the policyholder develops a health condition in New Hampshire. C. Guaranteed insurability riders allow the policyholder to purchase additional benefits, such as disability income coverage, without additional medical underwriting. D. Guaranteed insurability riders give the policyholder the right to convert a term life insurance policy to a whole life policy at a guaranteed rate in New Hampshire. The correct answer is D. Guaranteed insurability riders give the policyholder the right to convert a term life insurance policy to a whole life policy at a guaranteed rate in New Hampshire. A guaranteed insurability rider is an optional add-on benefit available with some term life insurance policies. This rider allows the policyholder to purchase additional coverage, increase the death benefit, at predetermined intervals or upon the occurrence of certain life events, e.g., marriage, birth of a child, without undergoing medical underwriting again. This can be beneficial if the insured's health status changes and they would not qualify for a new policy at standard rates. Ms. Hernandez should explain the specific terms of the guaranteed insurability rider, including the timing and frequency of additional coverage purchases allowed without medical underwriting. Question 44. Ms. Lee is a resident of New Hampshire and is considering applying for a health insurance policy on the individual marketplace. She is concerned about the availability of plans in her area. According to New Hampshire regulations, can insurance companies deny offering health insurance plans on the individual marketplace based on geographic location? A. Yes, insurance companies can choose not to offer plans on the individual marketplace in certain geographic areas of New Hampshire. B. No. Federal regulations under the ACA require insurance companies to offer plans in all service areas within a state on the individual marketplace. C. Insurance companies can limit the number of plans they offer on the individual marketplace in New Hampshire, but not based on specific geographic areas. D. Ms. Lee should contact the New Hampshire Department of Insurance to inquire about health plan availability in her area. The correct answer is C. Insurance companies can limit the number of plans they offer on the individual marketplace in New Hampshire, but not based on specific geographic areas. The Affordable Care Act, ACA, established health insurance marketplaces where individuals can shop for and compare health insurance plans. Insurers are not required to offer plans in every geographic area within a state, but they cannot deny offering plans solely based on an applicant's residence. However, insurers can limit the number of plans they offer on the marketplace. Question 45. An agent is explaining Medicare Supplement, Medigap, plans to a client in New Hampshire. The client asks if these plans can help cover the cost of prescription drugs. How should the agent respond? A. Medicare Supplement, Medigap, plans in New Hampshire typically cover a portion of the cost of prescription drugs. B. Medigap plans are designed to cover out-of-pocket costs associated with original Medicare, Parts A and B, but do not cover prescription drugs. C. Some Medigap plans may offer limited prescription drug coverage as an optional add-on benefit in New Hampshire. D. The agent cannot answer this question and should recommend the client consult with a Medicare specialist. The correct answer is B. Medigap plans are designed to cover out-of-pocket costs associated with Original Medicare, Parts A and B, but do not cover prescription drugs. Medicare Supplement, Medigap, plans are designed to help beneficiaries pay for out-of-pocket costs associated with Original Medicare, Parts A and B, such as deductibles, coinsurance, and copayments. These plans do not cover prescription drugs. Prescription drug coverage is typically obtained through a separate Medicare Part D plan. The agent should explain that the client can enroll in both a Medigap plan and a Part D plan to have comprehensive health coverage, including prescription drug coverage. Question 46. Mr. Rodriguez is a life insurance agent licensed in New Hampshire. A client inquires about the difference between a guaranteed acceptance whole life policy and a traditional whole life policy. How should Mr. Rodriguez explain the key differences to the client? A. Guaranteed acceptance whole life policies offer a lower death benefit than traditional whole life policies in New Hampshire. B. Guaranteed acceptance whole life policies have a simplified underwriting process, while traditional whole life policies require medical exams in New Hampshire. C. There is no difference. Guaranteed acceptance whole life is just a marketing term for a specific type of whole life policy. D. Guaranteed acceptance whole life policies do not accumulate a cash value, while traditional whole life policies do in New Hampshire. The correct answer is B. Guaranteed acceptance whole life policies have a simplified underwriting process, while traditional whole life policies require medical exams in New Hampshire. Guaranteed acceptance whole life insurance is a type of whole life policy designed for individuals who may not qualify for a traditional whole life policy due to health reasons. The key difference is the underwriting process. Guaranteed acceptance whole life policies typically have a simplified or no medical exam underwriting process. This can be beneficial for individuals who have health conditions that would otherwise make them uninsurable or result in higher premiums for a traditional whole life policy. However, guaranteed acceptance whole life policies may have limitations, such as lower death benefits or graded premiums that start out lower and increase over time. Mr. Rodriguez should explain these key differences in underwriting process, potential limitations, and how they can impact the overall cost and benefits of the policy. Question 47. Ms. Walker is a resident of New Hampshire and is considering a long-term care insurance policy. She is concerned about potential premium increases in the future. Does New Hampshire have any regulations regarding premium increases for long-term care insurance policies? A. Long-term care insurance premiums in New Hampshire are guaranteed to remain level throughout the policy period. B. There are no regulations in New Hampshire regarding premium increases for long-term care insurance policies. C. Insurers in New Hampshire can only increase premiums for long-term care policies based on age or geographic location. D. New Hampshire requires long-term care insurers to offer guaranteed renewable policies, meaning premiums cannot be increased based on health status. The correct answer is D. New Hampshire requires long-term care insurers to offer guaranteed renewable policies, meaning premiums cannot be increased based on health status. While there are no federal regulations specifically addressing premium increases for long-term care insurance, some states have adopted consumer protection measures. New Hampshire is one such state. New Hampshire requires long-term care insurance policies to be guaranteed renewable. This means that the insurer cannot cancel the policy or refuse to renew it as long as the premiums are paid on time. Additionally, they cannot increase premiums based solely on the policyholder's health status. However, premiums can be increased for an entire class of policyholders based on factors like inflation or claims experience. Question 48. An agent is explaining critical illness insurance to a client in New Hampshire. The client asks if the policy benefit is paid directly to the policyholder or the beneficiary. A. Critical illness insurance benefits in New Hampshire are always paid directly to the beneficiary named on the policy. B. The policyholder can choose whether the benefit is paid directly to them or the beneficiary in New Hampshire. C. Critical illness insurance benefits are typically paid to the medical provider to cover treatment costs in New Hampshire. D. The agent cannot answer this question definitively and should recommend the client consult with the specific insurance company for policy details. The correct answer is B. The policyholder can choose whether the benefit is paid directly to them or the beneficiary in New Hampshire. Critical illness insurance benefits are typically paid directly to the policyholder, not the medical provider. This allows the policyholder to decide how to use the benefit to cover medical expenses, replace lost income, or for other financial needs arising from a critical illness. In most cases, the policyholder can choose to designate a beneficiary to receive the benefit in the event of their death. The agent should explain that the specific claim payment process will be outlined in the policy details and the client can choose to have the benefit paid directly to themselves or a designated beneficiary. Question 49. Ms. Young is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a universal life insurance policy. How should Ms. Young explain the concept of premium flexibility with universal life insurance? A. Premium flexibility with universal life insurance in New Hampshire allows the policyholder to skip premium payments altogether. B. Universal life insurance policies in New Hampshire offer flexible payment options, but skipping premiums will reduce the cash value and death benefit. C. Premium flexibility allows the policyholder to increase the death benefit without medical underwriting in New Hampshire. D. Universal life insurance premiums are fixed throughout the policy period in New Hampshire and cannot be changed. The correct answer is B. Universal life insurance policies in New Hampshire offer flexible payment options, but skipping premiums will reduce the cash value and death benefit. Universal life insurance offers more flexibility than traditional whole life policies regarding premiums and cash value accumulation. Premium flexibility allows the policyholder to adjust premium payments within certain limits. They can increase premiums to accelerate cash value growth or pay minimum premiums to keep the policy in force. However, skipping premiums altogether will reduce the cash value and ultimately could lead to a policy lapse if there are insufficient funds to cover administrative costs. Ms. Young should explain how premium flexibility works with universal life insurance and the impact on cash value and death benefit. She should also emphasize the importance of paying sufficient premiums to keep the policy in force and meet long-term financial goals. Question 50. Mr. Garcia is a resident of New Hampshire and is currently enrolled in a group health insurance plan through his employer. He is considering leaving his job and is concerned about maintaining health insurance coverage. Under COBRA continuation provisions, how long can Mr. Garcia typically continue coverage under his employer's group health plan in New Hampshire? A. COBRA continuation coverage can extend for a maximum of 12 months in New Hampshire, regardless of the reason for job loss. B. Mr. Garcia can continue coverage under his employer's plan indefinitely as long as he pays the required premiums in New Hampshire. C. The COBRA continuation period depends on the size of the employer's group health plan in New Hampshire. D. COBRA continuation rights only apply to individuals who lose coverage due to involuntary job loss in New Hampshire. The correct answer is D. COBRA continuation rights only apply to individuals who lose coverage due to involuntary job loss in New Hampshire. The Consolidated Omnibus Budget Reconciliation Act, COBRA, provides certain individuals with the right to continue health insurance coverage under their group health plan after a qualifying event, such as job loss, reduction in hours, or death of a covered spouse. However, COBRA continuation is not guaranteed and typically comes at a higher cost, as the individual is responsible for paying the entire premium, employer and employee share, plus a possible administrative fee. In New Hampshire, COBRA continuation coverage typically lasts for 18 months, but only for individuals who lose coverage due to involuntary job loss. Voluntary termination of employment may not qualify for COBRA continuation. Question 51. An agent is explaining disability income insurance to a client in New Hampshire. The client asks how long benefit payments will last if they become disabled. How should the agent respond? A. Disability income insurance benefits in New Hampshire typically last for a maximum of 2 years, regardless of the cause of disability. B. The agent should explain that the benefit duration will vary depending on the specific policy provisions chosen by the client. C. Disability income benefits in New Hampshire will continue until the policyholder reaches retirement age. D. Benefit payments only last as long as the insured remains disabled and employed by their current employer in New Hampshire. The correct answer is B. The agent should explain that the benefit duration will vary depending on the specific policy provisions chosen by the client. Disability income insurance policies can offer a variety of benefit options, including benefit period, how long payments will last if disabled. Common benefit periods include 2 years, 5 years, or to age 65. The specific benefit period will depend on the policy design and the client's choices when applying for coverage. The agent should explain the different benefit period options available and how they can impact the cost of the premium. Question 52. Ms. Hernandez is a life insurance agent licensed in New Hampshire. A client inquires about the difference between a graded death benefit rider and a guaranteed insurability rider on a life insurance policy. A. Graded death benefit riders offer a reduced death benefit in the early years of the policy, while guaranteed insurability riders allow for additional coverage purchases without medical underwriting. B. Graded death benefit riders are typically offered with term life insurance policies, while guaranteed insurability riders are available with whole life policies in New Hampshire. C. There is no difference. These terms are just different marketing terms for the same rider. D. Graded death benefit riders accelerate the death benefit payout in the event of an accidental death in New Hampshire. The correct answer is A. Graded death benefit riders offer a reduced death benefit in the early years of the policy, while guaranteed insurability riders allow for additional coverage purchases without medical underwriting. A graded death benefit rider is an optional add-on benefit available with some life insurance policies, particularly term life insurance. It typically provides a reduced death benefit in the early years of the policy, often 100% or less of the face amount. The benefit amount then gradually increases over time until it reaches the full face amount. This rider can help keep the initial premium cost lower. A guaranteed insurability rider, on the other hand, allows the policyholder to purchase additional coverage, increase the death benefit, at predetermined intervals or upon the occurrence of certain life events without undergoing medical underwriting again. Ms. Hernandez should explain the different features and purposes of these two common riders. Question 53. Ms. Johnson is a resident of New Hampshire and is considering applying for Medicare Part D prescription drug coverage. She inquires about the donut hole coverage gap in Part D plans. How should you explain the donut hole to Ms. Johnson? A. The donut hole refers to a coverage gap in Part D plans where beneficiaries are responsible for all prescription drug costs. B. Part D plans have a monthly deductible that beneficiaries must meet before the plan starts paying benefits. The donut hole is the period after the deductible is met but before catastrophic coverage takes effect. C. The donut hole applies only to brand name prescription drugs in Part D plans. D. Once a beneficiary reaches the donut hole in a Part D plan, they are no longer responsible for any prescription drug costs. The correct answer is A. The donut hole refers to a coverage gap in Part D plans where beneficiaries are responsible for all prescription drug costs. The donut hole is a coverage gap in Medicare Part D prescription drug plans. After beneficiaries meet the initial deductible, they typically pay a percentage of the cost for covered prescriptions, coinsurance, until they reach a specific out-of-pocket threshold. This is the donut hole. Once beneficiaries reach the donut hole, they are responsible for a higher percentage of the prescription drug costs until they reach the catastrophic coverage stage. At that point, Part D starts paying a larger share of the costs. Ms. Johnson should be aware of the donut hole and factor it into her overall prescription drug cost calculations when choosing a Part D plan. Question 54. An agent is explaining critical illness insurance to a client in New Hampshire. The client asks if the policy covers the cost of treatment for any medical condition. How should the agent respond? A. Critical illness insurance policies in New Hampshire typically cover a defined list of critical illnesses, such as cancer, heart attack, or stroke. B. Critical illness insurance is designed to provide a cash benefit to help offset lost income if the policyholder is diagnosed with a critical illness, not to cover treatment costs directly. C. Critical illness insurance policies can be customized to cover any medical condition the client chooses in New Hampshire. D. The agent cannot answer this question definitively and should recommend the client consult with a doctor to determine covered conditions. The correct answer is A. Critical illness insurance policies in New Hampshire typically cover a defined list of critical illnesses, such as cancer, heart attack, or stroke. Critical illness insurance is not a substitute for health insurance. It is a specific type of insurance designed to provide a lump sum cash benefit if the policyholder is diagnosed with a covered critical illness. Critical illness policies typically have a defined list of illnesses, such as cancer, heart attack, stroke, or organ failure. The benefit payout can be used for various purposes, such as covering out-of-pocket medical expenses, replacing lost income, or paying for additional treatment options. The agent should explain that critical illness insurance can provide financial security in the event of a serious illness, but it is not designed to cover all medical expenses directly. Question 55. Mr. Rodriguez is a life insurance agent licensed in New Hampshire. A client inquires about purchasing a variable universal life insurance (VUL) policy. The client is concerned about the complexity of VUL policies. How should Mr. Rodriguez explain the concept of variable universal life insurance to the client? A. VUL policies are complex financial products that combine life insurance protection with investment opportunities in a variety of mutual funds. B. VUL policies are a safe investment option with guaranteed returns in New Hampshire. C. VUL policies are a good choice for anyone looking for affordable life insurance coverage. D. Mr. Rodriguez should recommend the client consult with a financial advisor before considering a VUL policy. The correct answer is D. Mr. Rodriguez should recommend the client consult with a financial advisor before considering a VUL policy. Variable Universal Life (VUL) insurance is a complex financial product that combines life insurance protection with investment features. The cash value in a VUL policy grows based on the performance of the chosen subaccounts, which are similar to mutual funds. This means the cash value and ultimately the death benefit can fluctuate depending on market conditions. VUL policies can be suitable for some clients seeking growth potential, but they are not appropriate for everyone. Mr. Rodriguez should acknowledge the complexity of VUL policies and explain the potential risks and rewards associated with the investment features. D. Is also a good recommendation, as consulting with a financial advisor can be especially helpful for clients unfamiliar with complex financial products. Question 56. A resident of New Hampshire is considering applying for health insurance through the individual marketplace. They inquire about the open enrollment period for marketplace plans. When is the annual open enrollment period typically held in New Hampshire? A. Open enrollment for the individual marketplace typically occurs in the spring months, March to May, in New Hampshire. B. Open enrollment is a year-round process, and individuals can apply for marketplace plans at any time in New Hampshire. C. The open enrollment period for the marketplace coincides with Medicare open enrollment in the fall, October to December, in New Hampshire. D. Individuals can only enroll in a marketplace plan during a qualifying event, such as job loss or change in family status, in New Hampshire. The correct answer is A. Open enrollment for the individual marketplace typically occurs in the spring months, March to May, in New Hampshire. The Federal Health Insurance Marketplace has a designated annual open enrollment period, OEP, when individuals can apply for or change health insurance plans. While specific dates can vary slightly from year to year, The OEP typically occurs in the fall, November to December, across most states. However, some states operate their own marketplaces and may have different enrollment rules. In New Hampshire, the open enrollment period for the individual marketplace typically occurs in the spring months, March to May. This is the time when individuals can shop for and enroll in plans for coverage effective the following July 1st. Outside of the OEP, enrollment options may be limited to qualifying events, such as job loss, marriage, or birth of a child. Question 57. An agent is explaining long-term care insurance to a client in New Hampshire. The client asks if long-term care insurance premiums can be tax-deductible. How should the agent respond? A. Long-term care insurance premiums are always tax-deductible in New Hampshire, regardless of the policyholder's income or age. B. The agent cannot answer this question definitively and should recommend the client consult with a tax advisor in New Hampshire. C. Federal tax law allows for partial deduction of long-term care insurance premiums if certain eligibility requirements are met. D. Long-term care insurance premiums are not tax-deductible in New Hampshire. The correct answer is C. Federal tax law allows for partial deduction of long-term care insurance premiums if certain eligibility requirements are met. Federal tax law allows for a partial deduction of long-term care insurance premiums, but there are limitations and eligibility requirements. The Internal Revenue Service, IRS, sets the annual deduction limits, which can change year to year. Generally, the older the policyholder, the higher the deductible amount. In addition, the policy must meet certain benefit requirements to qualify for the tax deduction. The agent should advise the client that long-term care premiums may be partially tax-deductible but recommend consulting with a tax advisor to determine their specific tax situation and eligibility for deductions. Question 58. Ms. Young is a life insurance agent licensed in New Hampshire. A client inquires about the difference between a term life insurance policy and a whole life insurance policy. How should Ms. Young explain the key differences to the client? A. Term life insurance offers guaranteed lifetime coverage, while whole life insurance provides temporary coverage in New Hampshire. B. The key difference is the premium. Term life is typically cheaper than whole life insurance in New Hampshire. C. Term life insurance builds cash value, while whole life insurance focuses solely on providing a death benefit. D. There is no difference. Term life and whole life are just different marketing terms for the same type of policy. The correct answer is B. The key difference is the premium. Term life is typically cheaper than whole life insurance in New Hampshire. Term life insurance and whole life insurance are two common types of life insurance products with distinct features. Here's a breakdown of the key differences. Term life insurance. Designed to provide temporary coverage for a specified period, e.g., 10, 20, or 30 years. Term life policies typically have lower premiums because they only pay a benefit if the insured dies within the specified term. They do not build cash value. Whole life insurance. Considered a permanent life insurance policy that remains in effect for the insured's lifetime as long as premiums are paid. Whole life insurance policies typically have higher premiums than term life because they build cash value over time. This cash value can be accessed through loans or withdrawals. Ms. Young should explain these key differences in terms of coverage duration, premium costs, and cash value accumulation to help the client decide which type of life insurance best meets their needs and budget. Question 59. An agent is explaining Medicare Supplement, Medigap, plans to a client in New Hampshire. The client inquires about the Medigap open enrollment period. Does Medicare have a specific enrollment period for Medigap plans? A. There is a guaranteed Medigap open enrollment period for all Medicare beneficiaries in New Hampshire. B. Medigap plans can be purchased during the annual Medicare open enrollment period, OEP, in the fall. C. Medicare beneficiaries in New Hampshire have a 6-month Medigap open enrollment period when they first become eligible for Medicare Part B. D. Medigap plans can be purchased at any time in New Hampshire, regardless of enrollment periods. The correct answer is C. Medicare beneficiaries in New Hampshire have a 6-month Medigap open enrollment period when they first become eligible for Medicare Part B. Medicare Supplement, Medigap, plans are sold by private insurance companies to help beneficiaries pay for out-of-pocket costs associated with original Medicare, Parts A and B. While there is no guaranteed open enrollment period for Medigap plans, Medicare beneficiaries have a specific enrollment window with important consumer protections. In New Hampshire, beneficiaries have a 6-month Medigap open enrollment period that begins the month they turn 65 and become eligible for Medicare Part B. During this Medigap open enrollment period, insurance companies cannot deny or charge them more for a Medigap plan due to pre-existing health conditions. Outside of this window, insurers can medically underwrite applicants and deny coverage or charge higher premiums based on health status. Question 60. Mr. Garcia is a resident of New Hampshire and is considering a disability income insurance policy. He is concerned about the financial impact if he becomes disabled and unable to work. What factors should Mr. Garcia consider when choosing a disability income insurance policy? A. The benefit amount is the primary factor. Mr. Garcia should choose a policy with the highest possible benefit regardless of the cost. B. Mr. Garcia should consider factors like benefit amount, elimination period, benefit duration, and own occupation definition in New Hampshire. C. Disability income insurance policies are all standardized in New Hampshire, so there is no need to compare different plan options. D. The cost of the premium is the most important factor. Mr. Garcia should choose the least expensive disability income insurance policy he can find. The correct answer is B. Mr. Garcia should consider factors like benefit amount, elimination period, benefit duration, and own occupation definition in New Hampshire. Disability income insurance can be a valuable financial safety net if Mr. Garcia becomes disabled and unable to work. When choosing a disability income insurance policy, several factors should be considered. Benefit amount. The monthly benefit amount should be sufficient to cover his essential expenses and replace a significant portion of his lost income. Elimination period. This is the waiting period between becoming disabled and when benefit payments begin. A longer elimination period typically results in a lower premium. Benefit duration. The policy should specify how long benefit payments will continue if disabled, e.g., 2 years, 5 years, or to age 65. Own occupation definition. This defines what constitutes a disability and the ability to perform one's own occupation, important for Mr. Garcia's specific job duties. Mr. Garcia should carefully evaluate these factors and choose a disability income insurance policy that meets his specific needs and budget. Question 61. Mr. Jones is a resident of New Hampshire and wants to purchase a long-term care insurance policy. He is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium increases for long-term care insurance policies in New Hampshire? A. Long-term care insurance premiums in New Hampshire are guaranteed to remain level for the entire policy period. B. New Hampshire law prohibits insurance companies from ever increasing premiums on long-term care insurance policies. C. Insurance companies in New Hampshire are required to obtain approval from the state insurance department before increasing premiums on long-term care insurance policies. D. Long-term care insurance policies in New Hampshire are subject to rate filings, and the New Hampshire Insurance Department has the authority to review and approve or disapprove these filings. The correct answer is D. Long-term care insurance policies in New Hampshire are subject to rate filings, and the New Hampshire Insurance Department has the authority to review and approve or disapprove these filings. New Hampshire does not guarantee fixed premiums for long-term care insurance. However, insurance companies must file proposed rate increases with the New Hampshire Insurance Department for review and approval. This process helps ensure that any premium increases are justified and not excessive. Source: https://www.prometric.com/media/1725/download. Review Chapter 12 Long-Term Care Insurance. Question 62. Ms. Smith is a life insurance agent licensed in New Hampshire. She is explaining disability income insurance to a client. Which of the following statements is true regarding disability income insurance policies in New Hampshire? A. There is no mandatory minimum benefit period for disability income insurance policies in New Hampshire. B. All disability income insurance policies sold in New Hampshire must include a waiver of premium benefit. C. New Hampshire requires disability income insurance policies to define disability using a strict own occupation clause. D. Insurers in New Hampshire are prohibited from denying coverage based on pre-existing health conditions for disability income insurance. The correct answer is A. There is no mandatory minimum benefit period for disability income insurance policies in New Hampshire. New Hampshire does not mandate specific benefit periods or inclusion of waiver of premium riders in disability income insurance policies. However, agents must accurately represent the policy provisions and ensure they meet the client's needs. Source: https://www.prometric.com/media/1725/download. Review Chapter 10 Accident and Health Insurance. Question 63. An insurance company is developing a new health insurance policy for the New Hampshire market. The policy includes a provision for denying coverage for certain conditions. According to New Hampshire law, which of the following conditions can be excluded from coverage under this new health insurance policy? A. Mental health conditions. B. Pre-existing conditions diagnosed within the last 6 months. C. Conditions covered by Medicare or Medicaid. D. Developmental disabilities. The correct answer is C. Conditions covered by Medicare or Medicaid. The Affordable Care Act, ACA, prohibits health insurance companies from denying coverage or charging higher premiums based on pre-existing conditions. However, the ACA allows plans to exclude coverage for conditions already covered by government programs like Medicare or Medicaid. Source: https://www.healthcare.gov/individual health marketplace under the Affordable Care Act. Question 64. Mrs. Garcia is a Medicare beneficiary residing in New Hampshire. She is interested in purchasing a Medicare supplement policy, Medigap, to help cover her out-of-pocket medical expenses. What is the most important factor for Mrs. Garcia to consider when choosing a Medigap plan in New Hampshire? A. The network of doctors and hospitals covered by the plan. B. Whether the plan offers benefits for prescription drugs. C. The overall cost of the premium, including deductibles and copayments. D. The financial rating and reputation of the insurance company offering the plan. The correct answer is C. The overall cost of the premium, including deductibles and copayments. Medigap plans are standardized across the nation by federal law. This means plans with the same letter designation, e.g., Plan A, Plan F, offer identical benefits regardless of the insurance company or location. Therefore, the most important factor for Mrs. Garcia is the cost of the plan, considering the premium, deductibles, and copayments, to find the plan that best fits her budget and healthcare needs. Source: https://www.medicare.gov/medigap-supplemental-insurance-plans/medigap plans. Question 65. Mr. Hernandez is a life insurance agent in New Hampshire and is presenting a universal life insurance policy to a client. Which of the following statements is accurate regarding the unique features of universal life insurance? A. Universal life insurance policies offer a guaranteed death benefit and a fixed premium throughout the policy period. B. Cash value accumulates within a universal life policy, and policyholders can borrow against this value. C. Universal life insurance premiums are typically lower than whole life insurance premiums. D. Universal life insurance policies offer a level guaranteed death benefit, but premiums may need to adjust to maintain coverage. The correct answer is B. Cash value accumulates within a universal life policy, and policyholders can borrow against this value. Universal life insurance offers a flexible premium structure. Unlike whole life with fixed premiums, policyholders can adjust their premium payments within certain limits. Cash value accumulates within the policy based on premiums paid and credited interest. Policyholders can borrow against this cash value, but such loans may reduce the death benefit. Question 66. The New Hampshire Insurance Department mandates specific agent licensing requirements. Which of the following statements is true regarding resident agent licensing in New Hampshire? A. There is no mandatory pre-licensing education requirement for resident life and health insurance agents in New Hampshire. B. Residents applying for a life and health insurance producer license in New Hampshire must pass a national exam and a state-specific exam. C. New Hampshire requires residents to complete continuing education credits to maintain their life and health insurance producer licenses. D. All of the above statements are true. The correct answer is D. All of the above statements are true. New Hampshire requires resident life and health insurance agents to meet all of the following criteria. Complete pre-licensing education. Pass a national exam, Series 7 or Series 63, and a state-specific exam, Series 12 to 63. Maintain an active resident producer license. Fulfill continuing education requirements every 2 years. Question 67. Ms. Lee is a resident of New Hampshire considering a health insurance policy with a health maintenance organization, HMO, network. What is one of the key advantages of choosing an HMO plan in New Hampshire? A. HMO plans typically offer a wider network of doctors and hospitals compared to preferred provider organization, PPO, plans. B. HMO plans often require referrals from a primary care physician, PCP, to see specialists within the network. C. HMO plans generally have lower out-of-pocket costs for covered services compared to PPO plans. D. HMO plans provide greater flexibility in choosing doctors and hospitals compared to PPO plans. The correct answer is C. HMO plans generally have lower out-of-pocket costs for covered services compared to PPO plans. HMO plans offer a network of contracted providers, including primary care physicians, PCPs, and specialists. Patients typically need a referral from their PCP to see specialists within the network. In exchange for this limited network access, HMO plans often have lower premiums and out-of-pocket costs for covered in-network services. Question 68. An insurance company is developing a new individual life insurance policy for sale in New Hampshire. According to New Hampshire regulations, which of the following statements is most accurate regarding policy replacement? A. The insurance company is not required to provide any disclosure materials to the policyholder considering replacing an existing life insurance policy. B. New Hampshire law mandates a specific grace period for policyholders to rescind a replacement life insurance policy. C. The insurance company must obtain written documentation from the policyholder outlining the reason for replacing the existing life insurance policy. D. All of the above statements are true regarding policy replacement in New Hampshire. The correct answer is D. All of the above statements are true regarding policy replacement in New Hampshire. New Hampshire has adopted the National Association of Insurance Commissioners, NAIC, Model Replacement Life Insurance Act. This model law requires insurers to provide specific disclosure materials to policyholders considering replacing an existing life insurance policy. Additionally, it mandates a 10-day free look period where the policyholder can rescind the new policy without penalty. Finally, it's good practice for insurers to obtain documentation outlining the reason for replacement, but not mandatory by law. Source: https://content.naic.org/sites/default/files/inline-files/mdl-613.pdf. Question 69. Mr. Davis is a senior citizen residing in New Hampshire. He is concerned about the rising costs of long-term care and wants to explore his options. Which of the following statements is accurate regarding long-term care insurance options in New Hampshire? A. Medicaid, a government program, will always cover the full cost of long-term care services in New Hampshire. B. Long-term care insurance policies are mandatory for all residents of New Hampshire over a certain age. C. Long-term care insurance can help pay for various long-term care services, including nursing home care and home health care. D. There are no federal or state programs available to help residents of New Hampshire afford long-term care. The correct answer is C. Long-term care insurance can help pay for various long-term care services, including nursing home care and home health care. Medicaid is a needs-based program, and eligibility for long-term care benefits depends on income and assets. Long-term care insurance is a private insurance product that can help pay for various long-term care services, including nursing home care, assisted living facilities, and home health care. While not mandatory, long-term care insurance can be a valuable tool for planning and managing the potential costs of long-term care needs. Source: https://www.medicare.gov/coverage/long-term-care. Question 70. Ms. Johnson is a resident of New Hampshire and is applying for a health insurance policy. She has a pre-existing medical condition. Under the Affordable Care Act, ACA, can Ms. Johnson be denied coverage or charged a higher premium based on her pre-existing condition? A. Yes, insurance companies in New Hampshire can deny coverage or charge higher premiums based on pre-existing conditions. B. The ACA allows some exceptions for pre-existing condition exclusions in health insurance plans. C. Ms. Johnson can be denied coverage, but not charged a higher premium due to her pre-existing condition. D. The ACA completely prohibits insurance companies from considering pre-existing conditions for coverage or premiums. The correct answer is D. The ACA completely prohibits insurance companies from considering pre-existing conditions for coverage or premiums. The Affordable Care Act, ACA, prohibits health insurance companies from denying coverage or charging higher premiums based on pre-existing conditions. This is a major consumer protection offered by the ACA. Source: https://www.healthcare.gov/individual health marketplace under the Affordable Care Act. Question 71. An insurance company is developing a new accident insurance policy for sale in New Hampshire. Accident insurance provides benefits in case of accidental injuries. According to New Hampshire regulations, which of the following statements is true regarding accident insurance benefits? A. Accident insurance policies in New Hampshire are mandated to cover all accidental injuries, regardless of severity. B. There are no restrictions on the benefits that can be offered by accident insurance policies in New Hampshire. C. Accident insurance benefits in New Hampshire are typically limited to specific types of injuries or disabilities. D. New Hampshire law prohibits insurance companies from offering accident insurance policies. The correct answer is C. Accident insurance benefits in New Hampshire are typically limited to specific types of injuries or disabilities. Accident insurance is a supplemental insurance product that provides benefits for specific expenses incurred due to accidental injuries. These benefits may include coverage for medical bills, lost wages, or a lump sum payout depending on the policy provisions. New Hampshire does not mandate specific benefits, but coverage is typically limited to certain types of injuries or disabilities outlined in the policy. Question 72. Mr. Walker is a life insurance agent in New Hampshire and is meeting with a client interested in critical illness insurance. What is one of the key advantages of critical illness insurance for policyholders? A. Critical illness insurance provides a death benefit to the beneficiary upon the policyholder's death. B. Critical illness insurance can help cover the costs associated with a critical illness diagnosis. C. Critical illness insurance premiums typically remain level throughout the entire policy period. D. Critical illness insurance offers guaranteed acceptance regardless of pre-existing health conditions. The correct answer is B. Critical illness insurance can help cover the costs associated with a critical illness diagnosis. Critical illness insurance is a specific type of life insurance that provides a lump sum payout if the policyholder is diagnosed with a covered critical illness, such as cancer, heart attack, or stroke. This payout can help cover medical bills, lost income, or other expenses associated with a critical illness. Question 73. Ms. Hernandez is a resident of New Hampshire considering a Medicare Advantage (MA) plan. What is the most significant difference between an MA plan and a traditional Medicare fee-for-service plan? A. MA plans offer a wider network of doctors and hospitals compared to traditional Medicare. B. Traditional Medicare generally covers a broader range of healthcare services than MA plans. C. MA plans typically require a monthly premium payment, while traditional Medicare is often premium-free. D. Traditional Medicare allows for greater flexibility in choosing doctors and specialists compared to MA plans. The correct answer is C. MA plans typically require a monthly premium payment, while traditional Medicare is often premium-free. Traditional Medicare, Parts A and B, is a fee-for-service program where beneficiaries pay a deductible and coinsurance for covered services. There is typically no monthly premium for Part A, hospital insurance, and a standard monthly premium for Part B, outpatient medical insurance. Medicare Advantage (MA) plans are offered by private insurance companies and act as an alternative to traditional Medicare. MA plans typically require a monthly premium payment in addition to any applicable Medicare Part B premium. They may also have specific networks of doctors and hospitals that policyholders must utilize. Question 74. An insurance company is developing a new group disability insurance policy for employers in New Hampshire. According to New Hampshire regulations, which of the following statements is accurate regarding mandated benefits in group disability insurance policies? A. New Hampshire mandates that all group disability insurance policies must include a long-term disability benefit. B. There are no mandated benefits required in group disability insurance policies offered in New Hampshire. C. Group disability insurance policies in New Hampshire must offer short-term disability benefits but can exclude long-term benefits. D. Insurers are prohibited from offering group disability insurance policies in New Hampshire unless they meet specific benefit requirements. The correct answer is B. There are no mandated benefits required in group disability insurance policies offered in New Hampshire. New Hampshire does not mandate specific benefits in group disability insurance policies. These policies are typically designed and negotiated between employers and insurance companies to meet the specific needs and budget of the employer group. Common group disability benefits may include short-term disability and long-term disability coverage, but it's not mandatory to include both. Question 75. Mr. Young is a life insurance agent in New Hampshire and is explaining the concept of insurable interest to a client. What is the most accurate definition of insurable interest in life insurance? A. The beneficiary named on the life insurance policy must be a blood relative of the insured. B. The beneficiary has a reasonable expectation of financial loss if the insured were to die. C. The insured must have a financial stake in the life of the beneficiary. D. Insurable interest only applies to life insurance policies with minor children as beneficiaries. The correct answer is B. The beneficiary has a reasonable expectation of financial loss if the insured were to die. Insurable interest is a legal concept that requires the beneficiary named on a life insurance policy to experience a financial loss if the insured were to die. This concept helps prevent people from taking out life insurance policies on individuals with whom they have no financial connection and potentially profiting from their death. For example, a spouse, child, parent, or business partner would typically have an insurable interest in the life of another. Question 76. Mr. Jones wants to purchase a long-term care insurance policy in New Hampshire. He is concerned about the potential for premium increases in the future. What is the most important factor for Mr. Jones to consider when evaluating long-term care insurance policies in New Hampshire? A. The initial premium amount. B. The benefits offered by the policy. C. The presence of a guaranteed renewability clause. D. The carrier's financial rating. The correct answer is C. The presence of a guaranteed renewability clause. The guaranteed renewability clause in a long-term care insurance policy ensures that the insurer cannot cancel the policy as long as Mr. Jones continues to pay the premiums. This protects him from future premium increases the insurer might implement for new policyholders. While the initial premium amount, benefits, and carrier's financial rating are important factors, the guaranteed renewability clause directly addresses Mr. Jones' concern about future premium increases. Question 77. According to New Hampshire law, what is one of the requirements for an agent selling accident and health insurance? A. Completion of a 40-hour pre-licensing course in property and casualty insurance. B. Passing the Series 7 exam for general securities registration. C. Passing the New Hampshire Accident and Health Agent examination. D. Being a resident of a state bordering New Hampshire. The correct answer is C. Passing the New Hampshire Accident and Health Agent examination. In New Hampshire, agents selling accident and health insurance must pass the state-specific New Hampshire Accident and Health Agent examination. This exam tests their knowledge of relevant insurance laws and regulations. The Series 7 exam is for general securities registration, not relevant to accident and health insurance. Property and casualty insurance covers different types of risks, and residency requirements can vary by state. Question 78. Ms. Lee is a resident of New Hampshire and is looking to purchase a long-term care insurance policy. She is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium rates for long-term care insurance in New Hampshire? A. Premiums for long-term care insurance in New Hampshire are guaranteed to remain level throughout the policy period. B. New Hampshire law prohibits insurance companies from increasing premiums on long-term care insurance policies for any reason. C. Insurance companies in New Hampshire are required to file any proposed premium increases with the state insurance department for approval. D. Long-term care insurance policies in New Hampshire are subject to guaranteed renewability, but premiums can be adjusted based on factors like inflation or claims experience. The correct answer is D. Long-term care insurance policies in New Hampshire are subject to guaranteed renewability, but premiums can be adjusted based on factors like inflation or claims experience. Guaranteed renewability is a provision in long-term care insurance policies that ensures the policy will be renewed by the insurer as long as premiums are paid. However, premiums can be adjusted under certain circumstances, such as inflation or the overall claims experience of the insurer. In New Hampshire, insurance companies must file any proposed premium increases with the state insurance department for review and approval. This helps to ensure that any increases are reasonable and justified. Question 79. Mr. Hernandez is a life insurance agent licensed in New Hampshire. He is contacted by a potential client who lives in Massachusetts. Can Mr. Hernandez sell life insurance to this client? A. Yes. Mr. Hernandez can sell life insurance to the client as long as he discloses that he is not licensed in Massachusetts. B. No. Mr. Hernandez cannot sell life insurance to the client because he is not licensed in Massachusetts. C. Yes. Mr. Hernandez can sell life insurance to the client if he obtains a temporary license in Massachusetts. D. No. Mr. Hernandez cannot sell life insurance to the client, but he can refer the client to a licensed agent in Massachusetts. The correct answer is B. No. Mr. Hernandez cannot sell life insurance to the client because he is not licensed in Massachusetts. Life insurance agents are required to be licensed in the state where the client resides. Since Mr. Hernandez is not licensed in Massachusetts, he cannot legally sell life insurance to a client who lives there. Option D is a good practice, but it's not the only option in this scenario. Question 80. A health insurance policy in New Hampshire covers a mental health benefit. The insured receives treatment for a mental health condition from a qualified provider who is not in the insurance company's network. In this situation, the insured can expect A. To be reimbursed for the full cost of the treatment, regardless of the provider's network status. B. To receive no reimbursement for the treatment because the provider is out of network. C. To be reimbursed for a portion of the cost of the treatment based on the insurance company's out-of-network benefit schedule. D. To be required to obtain a referral from an in-network provider before receiving treatment from an out-of-network provider. The correct answer is C. To be reimbursed for a portion of the cost of the treatment based on the insurance company's out-of-network benefit schedule. Most health insurance plans offer out-of-network benefits, which means the insured can receive covered services from providers who are not part of the plan's network. However, the reimbursement for out-of-network services is typically lower than for in-network providers. The insurance company will have an out-of-network benefit schedule that outlines the percentage of the allowed charges that will be reimbursed to the insured. Option D might be a requirement for some plans, but it's not always the case. Question 81. New Hampshire follows a specific mandated benefit for individual health insurance policies. What is not typically included in a mandated benefit for an individual health insurance policy in New Hampshire? A. Coverage for hospitalization. B. Coverage for preventive care services. C. Coverage for prescription drugs. D. Coverage for vision care. The correct answer is D. Coverage for vision care. New Hampshire follows the Federal Essential Health Benefits (EHB) standards mandated by the Affordable Care Act (ACA). These EHB categories include hospitalization, preventive and wellness services, ambulatory patient services, maternity and newborn care, mental health and substance use disorder services, prescription drugs, and pediatric services. Vision care is generally not included in the mandated EHB categories. Question 82. Ms. Davis is a resident of New Hampshire and is considering a Medicare supplement policy, Medigap. She is concerned about the potential for gaps in coverage between Medicare and her Medigap plan. According to New Hampshire regulations, what is not a requirement for standardized Medigap plans? A. Standardized Medigap plans must be guaranteed renewable. B. Standardized Medigap plans must offer a minimum level of coverage. C. Standardized Medigap plans can be priced differently by insurance companies. D. Standardized Medigap plans must cover all the beneficiaries' out-of-pocket costs under Medicare Part A. The correct answer is C. Standardized Medigap plans can be priced differently by insurance companies. Standardized Medigap plans are designed to help beneficiaries fill the gaps in coverage between original Medicare, Parts A and B, and their out-of-pocket expenses. These plans are federally standardized, meaning they offer a set of benefits regardless of the insurance company selling the plan. However, insurance companies can set their own premiums for these standardized plans within certain guidelines set by the state. Question 83. Mr. Anderson is a life insurance agent in New Hampshire and is explaining policy contestability to a client. What is the maximum contestable period for a life insurance policy issued in New Hampshire? A. 1 year from the policy issue date. B. 2 years from the policy issue date. C. The lifetime of the insured. D. It depends on the type of life insurance policy. The correct answer is B. 2 years from the policy issue date. The contestability period is a time frame during which the insurance company can contest the validity of a life insurance policy and potentially deny a death benefit claim if they discover material misrepresentations made on the application. In New Hampshire, The maximum contestable period for most life insurance policies is 2 years from the date of issue. Option D might be true for some specific policy types, but it's not generally applicable. Question 84. An individual health insurance policy in New Hampshire covers prescription drugs. The insured receives a maintenance medication through a mail-order pharmacy. Which of the following statements is most accurate regarding mail-order pharmacy benefits? A. Mail-order prescriptions will always be covered at a lower cost compared to a retail pharmacy. B. The insured will need to obtain prior authorization from the insurance company before using a mail-order pharmacy. C. Mail-order prescriptions typically require a higher copay or coinsurance compared to prescriptions filled at a retail pharmacy. D. The insured cannot use a mail-order pharmacy to fill prescriptions for their health insurance plan. The correct answer is C. Mail-order prescriptions typically require a higher copay or coinsurance compared to prescriptions filled at a retail pharmacy. Many health insurance plans offer mail-order pharmacy benefits as a cost-saving measure. While mail-order prescriptions may sometimes be cheaper, it's not always guaranteed. However, plans often have higher copays or coinsurance for prescriptions filled through mail-order compared to those filled at a retail pharmacy to incentivize using the lower-cost option. There is typically no prior authorization requirement for using a mail-order pharmacy within the plan's network. Question 85. New Hampshire has specific regulations regarding replacement of life insurance policies. According to New Hampshire law, which of the following statements is true regarding replacement of a life insurance policy? A. The replacing insurer is not required to provide a written notice to the existing insurer. B. The insured is not required to disclose the existence of the new policy to the original insurer. C. The replacing agent must obtain written documentation from the insured explaining the reason for replacing the existing policy. D. The insured has a specific right to cancel the new policy and reinstate the old one within a certain time frame. The correct answer is D. The insured has a specific right to cancel the new policy and reinstate the old one within a certain time frame. New Hampshire follows the National Association of Insurance Commissioners, NAIC, model regulation on replacement of life insurance. This regulation includes a mandated right to return or free look period. During this period, typically 10 or 20 days, the insured can cancel the new policy and reinstate the old one without penalty, as long as they are in good health. This allows the insured to compare the new and old policies before making a final decision. Options A, B, and C might be best practices but are not legal requirements. Question 86. A health insurance company in New Hampshire offers individual health insurance plans. The company implements a network of healthcare providers. What is the primary purpose of a network of healthcare providers in a health insurance plan? A. To restrict the insured's choice of healthcare providers. B. To ensure the healthcare providers meet specific quality standards. C. To negotiate lower rates for covered services with the healthcare providers. D. To provide administrative support for processing claims submitted by the insured. The correct answer is C. To negotiate lower rates for covered services with the healthcare providers. Health insurance companies develop networks of healthcare providers who have agreed to contract with the insurer to provide covered services at pre-negotiated rates. This allows the insurer to offer lower premiums to plan participants who utilize in-network providers. While option B might be a benefit, it's not the primary purpose. Option D is a function of the insurance company, not the network itself. Networks do limit choice to some extent, but that's not the main goal. Question 87. Ms. Carter is a resident of New Hampshire and is considering purchasing a disability income insurance policy. She is concerned about the financial impact if she becomes disabled and unable to work. Which of the following statements is most accurate regarding disability income insurance benefits in New Hampshire? A. Disability income insurance benefits are not subject to state income taxes in New Hampshire. B. There is no mandatory waiting period before benefits begin under a disability income insurance policy in New Hampshire. C. New Hampshire law mandates that all disability income insurance policies offer lifetime benefits. D. Disability income insurance benefits are considered secondary to any other disability benefits the insured may receive. The correct answer is A. Disability income insurance benefits are not subject to state income taxes in New Hampshire. Disability income insurance benefits are generally treated as income replacement and may be subject to federal income taxes. However, some states, including New Hampshire, exempt these benefits from state income taxation. This can be a significant advantage when considering the financial impact of a disability. Waiting periods, benefit duration, and coordination of benefits with other sources are determined by the specific policy provisions, not by state law. Question 88. An individual health insurance policy in New Hampshire includes coverage for mental health services. The insured undergoes inpatient treatment for a mental health condition. According to New Hampshire regulations, which of the following statements is true regarding mental health parity laws? A. The insurance company can impose stricter requirements for coverage of mental health services compared to medical, surgical services. B. Mental health benefits must cover all services deemed medically necessary by a qualified provider. C. The insured cannot be required to obtain prior authorization for inpatient mental health treatment. D. There is no mandated financial cap on the annual or lifetime dollar amount for mental health benefits. The correct answer is A. The insurance company can impose stricter requirements for coverage of mental health services compared to medical, surgical services. Mental health parity laws aim to ensure that mental health benefits offered by health insurance plans are equivalent to those for medical, surgical services. However, these laws typically set parity standards for financial requirements, not treatment protocols. An insurance company can still require prior authorization or have different service limitations for mental health compared to medical, surgical services, as long as the financial requirements, like copays, coinsurance, deductibles, are comparable. Option B might be offered by some plans but is not a legal requirement. Options C and D might be true for some plans but depend on the specific policy provisions. Question 89. Mr. Lopez is a life insurance agent licensed in New Hampshire and is contacted by a potential client who wants to purchase a universal life insurance policy. What is a key characteristic of a universal life insurance policy that Mr. Lopez should explain to the client? A. Universal life insurance policies offer a guaranteed death benefit and a fixed premium payment schedule. B. The cash value component of a universal life insurance policy can grow tax-deferred and be accessed through loans or withdrawals. C. Universal life insurance policies are typically more expensive than whole life insurance policies. D. Universal life insurance policies offer a level premium payment throughout the entire policy period. The correct answer is B. The cash value component of a universal life insurance policy can grow tax-deferred and be accessed through loans or withdrawals. Universal life insurance is a type of flexible premium, adjustable death benefit life insurance policy. A key feature is the cash value component. Policyholders can pay premiums that exceed the cost of insurance, and this excess amount accumulates as a cash value that grows on a tax-deferred basis. The policyholder can then access this cash value through loans or withdrawals, subject to policy limitations. Options A, C, and D might be true for some specific universal life products, but they are not generally characteristic of all universal life policies. Question 90. New Hampshire law mandates specific requirements for individual health insurance policies sold in the state. Which of the following statements is not required under these mandates? A. The policy must cover preventive care services without any cost-sharing requirements. B. The policy must offer coverage for hospitalization, including inpatient and outpatient services. C. The policy must provide coverage for prescription drugs, but there are no limitations on copays or coinsurance. D. The policy cannot deny coverage or charge higher premiums based on a pre-existing health condition. The correct answer is C. The policy must provide coverage for prescription drugs, but there are no limitations on copays or coinsurance. The Affordable Care Act, ACA, established essential health benefits, EHB, categories that most individual and small group health insurance plans must cover. These EHBs include preventive care services without any cost-sharing requirements, hospitalization, both inpatient and outpatient, and mental health and substance use disorder services. While prescription drug coverage is mandated, plans can impose copays or coinsurance for these medications. Option D refers to guaranteed issue, which is a requirement under the ACA for most health insurance plans. Question 91. Ms. Lee is a resident of New Hampshire and is considering a Medicare supplement policy, Medigap. She is concerned about the standardized nature of these plans. What is the main advantage of standardized Medigap plans? A. Standardized Medigap plans offer a wider variety of benefit options to choose from. B. Premiums for standardized Medigap plans can vary significantly depending on the insurance company. C. Standardized Medigap plans offer guaranteed renewability regardless of the insured's health status. D. Standardized Medigap plans can be customized to meet the specific needs of the individual beneficiary. The correct answer is C. Standardized Medigap plans offer guaranteed renewability regardless of the insured's health status. Standardized Medigap plans are federally designed to supplement Original Medicare, Parts A and B, by covering out-of-pocket expenses. These plans are standardized across insurance companies within a state, meaning they offer the same set of benefits regardless of the insurer. The primary advantage of this standardization is guaranteed renewability. As long as premiums are paid, the insurance company cannot cancel the policy due to the insured's health. Options A, B, and D are not necessarily true for standardized Medigap plans. Question 92. An individual health insurance policy in New Hampshire covers maternity and newborn care. The insured is expecting a child. According to New Hampshire regulations, which of the following statements is true regarding maternity coverage? A. The health insurance plan can require the insured to deliver the baby at a specific hospital within the network. B. The health insurance plan can deny coverage for any complications arising from the pregnancy or childbirth. C. The health insurance plan can impose a waiting period before coverage begins for the newborn child. D. The health insurance plan must cover all pregnancy-related services deemed medically necessary by the insured's physician. The correct answer is D. The health insurance plan must cover all pregnancy-related services deemed medically necessary by the insured's physician. Maternity and newborn care is one of the essential health benefits mandated under the ACA. This means individual health insurance plans in New Hampshire must cover pregnancy-related services deemed medically necessary by a physician. This includes prenatal care, labor and delivery, and postnatal care for the mother. Options A, B, and C would violate the ACA's maternity coverage mandates. Question 93. Mr. Garcia is a life insurance agent in New Hampshire and is explaining policy exclusions to a client. Which of the following is typically not excluded from coverage under a whole life insurance policy? A. Death by suicide within the first 2 years of the policy. B. War or acts of war. C. Travel to high-risk areas. D. Pre-existing health conditions. The correct answer is D. Pre-existing health conditions. Whole life insurance policies generally offer guaranteed death benefits, subject to certain exclusions. These exclusions may vary by policy, but some common examples include death by suicide within the first 2 years of the policy, often referred to as the suicide clause, war or acts of war, travel to high-risk areas, and engaging in hazardous activities. Pre-existing health conditions are typically covered under whole life insurance after a certain waiting period, depending on the severity of the condition. Question 94. A health insurance company in New Hampshire offers group health insurance plans. The company receives a notice of cancellation from a policyholder group. According to New Hampshire regulations, which of the following statements is true regarding group health insurance policy cancellations? A. The insurance company can immediately cancel the policy upon receiving the notice. B. Group health insurance policies in New Hampshire are guaranteed issue, meaning they cannot be canceled. C. The insurance company can only cancel the policy for non-payment of premiums. D. The cancellation will take effect at the end of the policy period following the notice. The correct answer is D. The cancellation will take effect at the end of the policy period following the notice. Group health insurance plans typically have specific provisions for cancellation by either the policyholder group or the insurance company. In New Hampshire, following proper notification procedures, the cancellation of a group health insurance policy will usually take effect at the end of the policy period following the notice. This allows for a smooth transition for plan participants and avoids any coverage gaps. Options A, B, and C are not generally true for group health insurance cancellations. Question 95. An individual health insurance policy in New Hampshire includes coverage for substance use disorder treatment. The insured is seeking treatment for drug addiction. According to New Hampshire regulations, which of the following statements is most accurate regarding mental health parity and substance use disorder treatment? A. The insurance company can impose stricter requirements for substance use disorder treatment compared to mental health treatment. B. Mental health parity laws do not apply to substance use disorder treatment benefits. C. The insured must obtain prior authorization for all substance use disorder treatment services. D. The health insurance plan must offer coverage for substance use disorder treatment that is equivalent to mental health coverage. The correct answer is D. The health insurance plan must offer coverage for substance use disorder treatment that is equivalent to mental health coverage. Mental health parity laws aim to ensure that insurance coverage for mental health services is equivalent to that for medical, surgical services. These laws have been expanded to include substance use disorder treatment in many states, including New Hampshire. This means the insurance company cannot impose stricter requirements or limitations on substance use disorder treatment compared to mental health treatment, as long as the services are deemed medically necessary. Option C might be a requirement for some plans, but it doesn't necessarily apply to all substance use disorder treatment services. Question 96. Ms. Walker is a resident of New Hampshire and is considering a long-term care insurance policy. She is concerned about the possibility of lapses in coverage if she fails to pay premiums on time. According to New Hampshire regulations, what is a required provision in most long-term care insurance policies sold in the state? A. A grace period for premium payments. B. Guaranteed reinstatement if the policy lapses. C. Waiver of premium benefit if disabled. D. All of the above. The correct answer is D. All of the above. Most long-term care insurance policies sold in New Hampshire and many states nationwide are required to include several consumer protection provisions. These provisions may include grace period for premium payments. This allows the policyholder a certain time frame, typically 30 to 60 days, to pay a missed premium before the policy lapses. Guaranteed reinstatement. If the policy lapses due to non-payment of premium, the policyholder may have the right to reinstate the policy within a specific time frame, usually by paying the missed premiums and possibly some additional fees. Waiver of premium benefit. If the policyholder becomes disabled and meets certain criteria, the insurance company may waive future premium payments while the insured remains disabled. These provisions offer some flexibility and protection for policyholders who experience difficulty paying premiums. Question 97. Mr. Hernandez is a life insurance agent licensed in New Hampshire. He is contacted by a potential client who wants to purchase a term life insurance policy. What is a key characteristic of a term life insurance policy that Mr. Hernandez should explain to the client? A. Term life insurance offers a guaranteed death benefit throughout the entire policy period. B. Term life insurance premiums typically remain level throughout the policy term. C. Term life insurance policies accumulate a cash value that can be accessed by the policyholder. D. Term life insurance is a permanent form of life insurance coverage. The correct answer is B. Term life insurance premiums typically remain level throughout the policy term. Term life insurance is a temporary form of life insurance coverage that provides a death benefit to the beneficiary if the insured dies within a specified period, the policy term. A key characteristic of term life insurance is that premiums are typically level throughout the policy term. This means the policyholder pays the same premium amount each year for the duration of the coverage period. Options A, C, and D are not characteristic of term life insurance policies. Question 98. An individual health insurance plan offered in New Hampshire covers durable medical equipment, DME. The insured requires a wheelchair due to a permanent disability. According to New Hampshire regulations, which of the following statements is true regarding coverage for DME? A. The health insurance plan can deny coverage for the wheelchair if a less expensive option is available. B. The insured must always obtain prior authorization from the insurance company before obtaining DME. C. The health insurance plan must cover the wheelchair as long as it is deemed medically necessary by the insured's physician. D. Coverage for DME is excluded from all individual health insurance plans sold in New Hampshire. The correct answer is C. The health insurance plan must cover the wheelchair as long as it is deemed medically necessary by the insured's physician. Many individual health insurance plans cover durable medical equipment, DME, that is medically necessary to diagnose or treat a medical condition. This may include wheelchairs, walkers, oxygen tanks, and other equipment. In most cases, the health insurance plan cannot deny coverage for DME solely because a less expensive option is available, as long as the prescribed equipment meets the insured's needs. Prior authorization requirements for DME can vary by plan, so option B is not necessarily true. Coverage for DME is not generally excluded from individual health insurance plans. Option C is the most accurate statement, considering the insured's physician deems the wheelchair medically necessary. Question 99. An insurance company in New Hampshire offers accident and health insurance policies. The company receives a claim for a hospitalization due to a pre-existing condition. According to New Hampshire regulations and the Affordable Care Act, ACA, which of the following statements is true regarding coverage for pre-existing conditions? A. The insurance company can deny coverage for the hospitalization because it is due to a pre-existing condition. B. The insurance company can impose a lifetime dollar limit on benefits for pre-existing conditions. C. The insurance company can require the insured to meet a longer waiting period before coverage begins for pre-existing conditions. D. The insurance company must cover the hospitalization for the pre-existing condition, subject to the policy terms and conditions. The correct answer is D. The insurance company must cover the hospitalization for the pre-existing condition, subject to the policy terms and conditions. The Affordable Care Act, ACA, prohibits health insurance companies from denying coverage or charging higher premiums based on pre-existing health conditions. This means the insurance company must cover the hospitalization for the pre-existing condition, as long as the hospitalization is covered under the policy terms and the insured has met any plan deductibles or coinsurance requirements. Options A, B, and C were previously allowed practices but are no longer permitted under the ACA's guaranteed issue and community rating provisions. Question 100. Ms. Diaz is a resident of New Hampshire and is considering a Medicare Advantage, Part C, plan. What is a key difference between a Medicare Advantage plan and a traditional Medicare Supplement, Medigap, plan? A. Medicare Advantage plans are offered by private insurance companies, while Medigap plans are administered by the federal government. B. Medicare Advantage plans typically offer broader coverage compared to Medigap plans. C. Medigap plans can only be purchased by individuals who are already enrolled in a Medicare Advantage plan. D. Both Medicare Advantage and Medigap plans require enrollment in both Medicare Part A and Part B. The correct answer is B. Medicare Advantage plans typically offer broader coverage compared to Medigap plans. Medicare Advantage, Part C, plans are offered by private insurance companies that contract with Medicare to provide coverage. These plans typically offer a broader range of benefits compared to traditional Medicare, Parts A and B, which may include hospitalization, preventive care, prescription drug coverage, and sometimes additional benefits like vision or dental care. Medigap plans, on the other hand, are supplemental insurance policies designed to help fill the gaps in traditional Medicare coverage, such as deductibles, coinsurance, and copays. Option C is incorrect. Medigap plans can be purchased by individuals already enrolled in traditional Medicare. Option D is true for both Medicare Advantage and Medigap plans. Question 101. A health insurance company in New Hampshire offers individual health insurance plans. The company implements a utilization review process. What is the primary purpose of a utilization review process in a health insurance plan? A. To ensure the healthcare providers in the network meet specific quality standards. B. To control healthcare costs by managing the use of covered services. C. To educate policyholders on healthy lifestyle choices and preventive care measures. D. To streamline the administrative process for claims adjudication. The correct answer is B. To control healthcare costs by managing the use of covered services. Utilization review is a process used by health insurance companies to manage the use of covered services and control healthcare costs. This may involve reviewing the medical necessity of a service before it is provided, monitoring the length of hospital stays, or requiring second opinions for certain procedures. While can have a secondary impact on quality control, option A, that's not the primary purpose. Educating policyholders, option C, is a separate function of the insurance company, and claims processing, option D, is a different step that follows UR. The primary goal is to ensure covered services are medically necessary and cost-effective. Question 102. Mr. Johnson is a resident of New Hampshire and is considering purchasing a critical illness insurance policy. He wants to understand the benefits offered by such a policy. Which of the following statements is most accurate regarding critical illness insurance benefits? A. Critical illness insurance policies provide a guaranteed death benefit upon the diagnosis of a covered critical illness. B. Benefits from a critical illness insurance policy are paid directly to the healthcare provider to cover medical expenses. C. The insured can use the benefit payout from a critical illness policy however they see fit, regardless of medical expenses. D. Critical illness insurance is a form of long-term care insurance that helps pay for assisted living expenses. The correct answer is C. The insured can use the benefit payout from a critical illness policy however they see fit, regardless of medical expenses. Critical illness insurance is a type of supplemental insurance that provides a lump sum benefit payout upon the diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. The insured can use this benefit payout however they see fit, to help cover medical bills, lost wages, or other expenses associated with the illness. Option A is not true. Critical illness insurance pays a benefit while the insured is alive. Option B is not always the case. The payout is typically made directly to the insured. Option D refers to a different type of insurance product. Question 103. An individual health insurance plan offered in New Hampshire covers outpatient mental health services. The insured is undergoing therapy for depression. According to New Hampshire regulations, which of the following statements is true regarding coverage for mental health services? A. The health insurance plan can require the insured to participate in medication management as a condition of coverage for therapy. B. The insurance company can set a limit on the number of outpatient mental health therapy sessions covered per year. C. The health insurance plan cannot impose any restrictions on the type of mental health professional the insured can see. D. Mental health benefits under the plan are subject to a higher deductible compared to other covered services. The correct answer is B. The insurance company can set a limit on the number of outpatient mental health therapy sessions covered per year. Mental health parity laws aim to ensure that coverage for mental health services is equivalent to that for medical, surgical services. However, these laws typically don't prevent plans from setting reasonable limitations on coverage. This may include setting a limit on the number of outpatient therapy sessions covered per year, imposing copay or coinsurance requirements, or requiring prior authorization for certain services. Option A might be a practice by some plans, but it's not universally mandated. Option C is not necessarily true. Some plans might require the provider to be in-network or have specific qualifications. Option D might be the case for some plans, but it depends on the specific benefit design. Question 104. Ms. Lee is a life insurance agent licensed in New Hampshire and is explaining policy replacement to a client. What is an important factor for Ms. Lee to discuss with the client regarding replacement of a life insurance policy? A. The new policy might have a higher guaranteed interest rate than the existing policy. B. The new policy might have a grace period for premium payments, while the existing policy does not. C. The existing policy may have a cash value that could be lost if replaced with a new policy. D. All life insurance policies sold in New Hampshire have a contestability period of 2 years. The correct answer is C. The existing policy may have a cash value that could be lost if replaced with a new policy. Replacing an existing life insurance policy with a new one can have financial implications. An important factor for Ms. Lee to discuss is the potential loss of the cash value accumulated in the existing policy. Many whole life and some universal life insurance policies accrue a cash value over time. If the existing policy is surrendered to replace it with a new one, this cash value might be forfeited or subject to surrender charges. While options A, B, and D might be features of the new policy, they don't directly address the potential downside of replacing the existing policy. Question 105. An individual health insurance policy offered in New Hampshire covers preventive care services. The insured wants to schedule an annual physical exam. According to New Hampshire regulations and the Affordable Care Act, ACA, which of the following statements is true regarding coverage for preventive care services? A. The health insurance plan can require the insured to meet a deductible before coverage for preventive care begins. B. The insured must obtain a referral from their primary care physician before scheduling a preventive care service. C. The health insurance plan must cover preventive care services with no cost-sharing requirements, like copays or coinsurance. D. Preventive care benefits are not mandated under the ACA and coverage varies by plan. The correct answer is C. The health insurance plan must cover preventive care services with no cost-sharing requirements, like copays or coinsurance. The Affordable Care Act, ACA, mandates preventive care services as one of the essential health benefits that most individual and small group health insurance plans must cover. These preventive care services must be covered with no cost-sharing requirements, meaning the insured does not have to pay any deductibles, copays, or coinsurance for covered preventive services. This is to encourage preventive care and early detection of potential health issues. Options A, B, and D are not true according to the ACA's preventive care mandates. Question 106. Mr. Hernandez is a resident of New Hampshire and is considering a long-term care insurance policy. He is concerned about the rising costs of long-term care services. Which of the following statements is true regarding long-term care insurance benefits? A. Long-term care insurance policies typically cover the full cost of all long-term care services. B. Benefits from a long-term care insurance policy are paid directly to the healthcare facility providing the care. C. Long-term care insurance policies may have limitations on the daily benefit amount and the total lifetime benefit. D. All long-term care insurance policies sold in New Hampshire require the insured to spend down a significant amount of their assets before benefits are paid. The correct answer is C. Long-term care insurance policies may have limitations on the daily benefit amount and the total lifetime benefit. Long-term care insurance policies help pay for the costs associated with needing assistance with daily living activities, ADLs, due to illness, disability, or cognitive impairment. These policies typically pay a daily or monthly benefit to help cover the cost of care in a nursing home, assisted living facility, or for home health care services. It's important to understand that benefits may have limitations. Common limitations include a daily maximum benefit amount, a lifetime maximum benefit amount, and a waiting period before benefits begin. Option A is not typical. Most plans have benefit limitations. Option B might be the case, but it depends on the policy provisions. Option D is not always true. Some plans may have asset limitations, but not all. Question 107. A health insurance company in New Hampshire offers group health insurance plans. The company receives a claim for a prescription drug that is not on the plan's formulary. What is a formulary and how does it impact coverage for prescription drugs? A formulary is a list of preferred medications that the insurance company covers at the lowest cost sharing tiers. B. Medications not on the formulary are automatically excluded from coverage under the group health insurance plan. C. The insured will always pay a higher coinsurance for medications that are not on the formulary compared to formulary drugs. D. A formulary is a medication pricing guide provided by the pharmacy to the insurance company. The correct answer is A. A formulary is a list of preferred medications that the insurance company covers at the lowest cost sharing tiers. A formulary is a list of medications that a health insurance plan covers at specific cost-sharing tiers. The formulary is typically developed by a team of healthcare professionals to include safe and effective medications for various medical conditions. The goal is to control costs while ensuring patients have access to necessary medications. Medications not on the formulary, non-formulary drugs, may still be covered, but often with a higher coinsurance requirement compared to formulary medications. Option B is not always true. Some plans might cover non-formulary drugs with prior authorization. Option C is likely true, but not guaranteed. Option D is not the function of a formulary. Question 108. Ms. Carter is a resident of New Hampshire and is considering applying for disability income insurance. She has a pre-existing medical condition. According to New Hampshire regulations and the Affordable Care Act, ACA, which of the following statements is true regarding disability income insurance and pre-existing conditions? A. The insurance company can deny coverage based solely on Ms. Carter's pre-existing condition. B. Ms. Carter will likely be subject to a higher premium rate due to her pre-existing condition. C. The ACA prohibits disability insurance companies from imposing waiting periods for pre-existing conditions. D. Disability income insurance benefits are considered taxable income for the insured. The correct answer is B. Ms. Carter will likely be subject to a higher premium rate due to her pre-existing condition. The Affordable Care Act, ACA, primarily applies to health insurance, not disability income insurance. Disability insurance is not regulated by the ACA in the same way. This means insurance companies can consider pre-existing conditions when underwriting disability insurance applications. They may deny coverage, offer a policy with exclusions related to the pre-existing condition, or charge a higher premium rate. Option A might happen, but it depends on the underwriter's assessment. Option C is not necessarily true for disability insurance. While the ACA mandates guaranteed issue for certain health insurance plans, disability insurance is not subject to the same rules. Option D is typically true. disability benefits are generally considered taxable income. Question 109. An individual health insurance plan offered in New Hampshire covers inpatient hospital stays. The insured is admitted to the hospital for a surgical procedure. According to New Hampshire regulations, which of the following statements is true regarding coverage for inpatient hospital admissions? A. The health insurance plan can deny coverage for the hospitalization if the insured did not obtain a referral from their primary care physician. B. The insured is entitled to choose any hospital within or outside of the insurance plan's network for inpatient care. C. The health insurance plan must cover the inpatient hospital admission at the in-network facility benefit level. D. The attending physician who performs the surgery must be in network for the hospitalization to be covered. The correct answer is C. The health insurance plan must cover the inpatient hospital admission at the in-network facility benefit level. Individual health insurance plans typically cover inpatient hospital admissions for medically necessary services. The plan likely offers different benefit levels for in-network and out-of-network facilities. In most cases, the plan would cover the hospitalization at the in-network facility benefit level, which typically involves lower deductibles and coinsurance compared to out-of-network care. Option A might be a plan requirement for outpatient care, but not necessarily for inpatient admissions. Option B might be true, but the in-network benefit level would likely be more favorable. Option D might be relevant for in-network coverage, but it doesn't necessarily apply to out-of-network situations. Question 110. Mr. Garcia is a life insurance agent licensed in New Hampshire and is explaining policy riders to a client. What is a policy rider and how can it impact a life insurance policy? A. A policy rider is a marketing brochure that explains the benefits of a life insurance policy. B. A policy rider is an optional amendment that adds additional benefits or features to a life insurance policy. C. Policy riders are required by New Hampshire regulations to be included in all life insurance policies. D. Riders are separate life insurance policies that can be purchased in addition to a primary life insurance policy. The correct answer is B. A policy rider is an optional amendment that adds additional benefits or features to a life insurance policy. A policy rider is an optional amendment that can be added to a life insurance policy for an additional premium. Riders provide additional benefits or features that are not typically included in the base policy. For example, a rider might add a waiver of premium benefit if the insured becomes disabled, a disability income benefit, or an accidental death benefit. Option A is a marketing tool, not part of the policy itself. Option C is not true. Riders are optional. Option D describes separate policies, not riders. Question 111. A health insurance company in New Hampshire offers individual health insurance plans. The company receives a complaint from an insured who believes they were unfairly denied coverage for a medical service. According to New Hampshire regulations, how should the insurance company handle this situation? A. The insurance company can simply deny the appeal without providing any explanation to the insured. B. The insurance company must provide a written explanation to the insured detailing the reasons for the denial of coverage. C. The insured must file a formal complaint with the New Hampshire Department of Insurance to appeal the denial. D. The insurance company can offer the coverage but at a significantly higher premium rate. The correct answer is B. The insurance company must provide a written explanation to the insured detailing the reasons for the denial of coverage. Insurance companies in New Hampshire are required to have a fair and impartial internal appeals process for handling denied claims or coverage requests. If an insured disagrees with a denial of coverage, the insurance company must provide a written explanation outlining the reasons for the denial and the specific policy provisions or exclusions relied upon. Option A would be a violation of fair claims handling procedures. Option C might be the next step if the insured is not satisfied with the internal appeal, but the company must first follow its internal process. Option D is not a typical response to an appeal. Question 112. Ms. Walker is a resident of New Hampshire and is considering a Medicare supplement, Medigap, policy. She is concerned about the costs associated with Medigap plans. Which of the following statements is true regarding the pricing of Medigap plans in New Hampshire? A. Medigap plans in New Hampshire are all standardized and have the same premium rates for a given plan type, e.g., Plan A, Plan F. B. Medicare sets the premium rates for all Medigap plans nationwide. C. Ms. Walker's age is the primary factor determining the premium rate for a Medigap plan. D. Medigap plans in New Hampshire are free for all Medicare beneficiaries. The correct answer is C. Ms. Walker's age is the primary factor determining the premium rate for a Medigap plan. Medicare supplement, Medigap, plans are standardized across a state by plan type, e.g., Plan A, Plan F, meaning they offer the same set of benefits. However, Medigap plans are sold by private insurance companies, and these companies can set their own premium rates for the standardized plans they offer. Therefore, the primary factor influencing the premium cost for Ms. Walker would be her age. Younger enrollees typically pay lower premiums than older enrollees for the same Medigap plan. Option A is partially true. Plans are standardized, but premiums can vary. Option B is not true. Medicare sets the benefits but not the prices for Medigap plans. Option D is not true. Medigap plans are not free. They require premium payments. Question 113. An individual health insurance plan offered in New Hampshire covers mental health services. The insured is undergoing treatment for an anxiety disorder. According to New Hampshire regulations and the Affordable Care Act, ACA, which of the following statements is true regarding coverage for mental health parity? A. The health insurance plan can require the insured to participate in substance abuse treatment as a condition of coverage for mental health services. B. The mental health benefits under the plan may have a different deductible than the deductible for medical, surgical services. C. Mental health benefits are completely excluded from coverage under the ACA. D. The insurance company cannot impose more restrictive requirements on mental health benefits compared to medical, surgical benefits. The correct answer is D. The insurance company cannot impose more restrictive requirements on mental health benefits compared to medical, surgical benefits. Mental health parity laws aim to ensure that insurance coverage for mental health services is equivalent to that for medical, surgical services. This means the insurance company cannot impose more stringent requirements, limitations, or financial barriers on accessing mental health services compared to medical, surgical services. Option A would violate parity principles. Option B might be true depending on the plan design, but it doesn't necessarily violate parity as long as the deductibles are comparable. Option C is not true. The ACA mandates mental health coverage as an essential health benefit. Question 114. An insurance company in New Hampshire offers group health insurance plans. The company is marketing a new voluntary critical illness insurance policy that can be added to the group health plan. According to New Hampshire regulations, which of the following statements is true regarding the marketing of voluntary benefits? A. The insurance company can only market voluntary benefits to employers, not directly to employees. B. Voluntary benefits must be clearly identified as separate products from the employer-sponsored group health plan. C. Employees cannot waive coverage under the voluntary critical illness insurance policy. D. Premiums for voluntary benefits can be deducted from employees' paychecks without their authorization. The correct answer is B. Voluntary benefits must be clearly identified as separate products from the employer-sponsored group health plan. Voluntary benefits are optional insurance products offered in conjunction with employer-sponsored group health plans. These benefits are separate from the group health plan and typically require employees to pay additional premiums through payroll deduction to enroll. According to New Hampshire regulations, voluntary benefits must be clearly identified as separate products from the employer-sponsored group health plan to avoid any confusion for employees. Option A is not necessarily true. Marketing materials might target both employers and employees. Option C is not true. Employees can choose to waive coverage under a voluntary plan. Option D would require employee authorization for payroll deductions. Question 115. Ms. Hernandez is a resident of New Hampshire and is considering purchasing a long-term care insurance policy. She wants to understand the different types of long-term care services covered by such a policy. Which of the following statements is most accurate regarding long-term care insurance coverage? A. Long-term care insurance policies only cover the cost of care in nursing homes. B. Benefits from a long-term care insurance policy can be used to pay for home health care services that assist with daily living activities. C. Long-term care insurance policies typically cover custodial care, which involves assistance with personal hygiene but not necessarily skilled medical care. D. All long-term care insurance policies cover the cost of assisted living facilities regardless of the level of care needed. The correct answer is B. Benefits from a long-term care insurance policy can be used to pay for home health care services that assist with daily living activities. Long-term care insurance policies can cover a variety of long-term care services depending on the specific plan design. These services may include nursing home care, assisted living facilities, home health care services, and adult daycare. Home health care services that assist with daily living activities, ADLs, such as bathing, dressing, and eating are often covered benefits under long-term care insurance. Option A is not true. Some plans cover other care settings. Option C is true. Custodial care is a common benefit. Option D is not necessarily true. Some plans may have limitations on assisted living facility coverage. Question 116. A health insurance company in New Hampshire receives a claim for an out-of-network emergency room visit. According to New Hampshire regulations, which of the following statements is true regarding coverage for emergency room services? A. The insurance company can deny coverage for the emergency room visit entirely because it was out of network. B. The insurance company must cover the emergency room visit at the in-network benefit level. C. Emergency room services are mandated benefits under the Affordable Care Act, ACA, regardless of the network status. D. The insured is responsible for all charges associated with the out-of-network emergency room visit. The correct answer is C. Emergency room services are mandated benefits under the Affordable Care Act, ACA, regardless of the network status. The Affordable Care Act, ACA, mandates emergency services as an essential health benefit that most health insurance plans must cover. This includes coverage for emergency room services regardless of whether the provider is in-network or out-of-network. The patient cannot be denied coverage or charged a higher deductible or coinsurance for emergency room services due to the nature of the emergency. Option A is not true. Coverage is mandated. Option B might be how the claim is processed for in-network emergency services, but out-of-network coverage also applies. Option D is not true. The ACA mandates coverage for emergency services. The patient might still be responsible for some cost sharing, but they cannot be denied coverage entirely. Question 117. An individual health insurance plan offered in New Hampshire has a network of preferred hospitals. The insured is considering scheduling an elective surgery. According to New Hampshire regulations, which of the following statements is true regarding coverage for in-network and out-of-network services? A. The plan design must offer the same benefits and cost-sharing requirements for in-network and out-of-network hospitals. B. The insured is required to obtain a referral from their primary care physician before scheduling an elective surgery at an in-network hospital. C. The health insurance plan typically offers lower deductibles and coinsurance for covered services received at in-network hospitals compared to out-of-network hospitals. D. Out-of-network hospitals cannot bill the insured for any charges not covered by the insurance plan. The correct answer is C. The health insurance plan typically offers lower deductibles and coinsurance for covered services received at in-network hospitals compared to out-of-network hospitals. Health insurance plans typically offer a network of preferred providers, hospitals, doctors, who have contracted with the insurance company to provide services at negotiated rates. The plan usually offers lower deductibles, coinsurance, and copays for in-network services compared to out-of-network services. This is to encourage patients to utilize in-network providers to control healthcare costs. Option A is not true. Plans can offer different benefits and cost sharing for in-network and out-of-network providers. Option B might be a plan requirement, but it's not specific to in-network or out-of-network care. Option D is not necessarily true. Out-of-network providers can bill patients for charges exceeding the plan's allowed amount. Balance billing. Question 118. Mr. Thompson is a life insurance agent licensed in New Hampshire and is meeting with a client to discuss life insurance needs. Which of the following statements is true regarding term life insurance and whole life insurance? A. Term life insurance premiums typically remain level throughout the policy term. B. Whole life insurance policies accumulate a cash value over time, while term life insurance policies do not. C. Term life insurance is a type of permanent life insurance that provides lifetime coverage. D. Both term life and whole life insurance offer a guaranteed death benefit to the beneficiary upon the insured's death. The correct answer is D. Both term life and whole life insurance offer a guaranteed death benefit to the beneficiary upon the insured's death. Term life insurance and whole life insurance are two common types of life insurance products. Term life insurance provides coverage for a specific period, term, such as 20 or 30 years. If the insured dies within the term, the death benefit is paid to the beneficiary. Term life premiums are typically level throughout the policy term, but they may increase when the policy is renewed for another term. Whole life insurance, on the other hand, is a permanent form of life insurance that remains in effect for the insured's lifetime as long as premiums are paid. Whole life insurance policies typically accumulate a cash value over time, which can be accessed through loans or withdrawals. Option C is not true. Term life insurance is temporary coverage. Option D is true for both term and whole life insurance. They both pay a death benefit upon the insured's death. Question 119. A health insurance company in New Hampshire offers individual health insurance plans. The company is developing a new health and wellness program for its members. Which of the following statements is most accurate regarding health and wellness programs offered by health insurance companies? A. Participation in health and wellness programs is mandatory for all enrollees in the health insurance plan. B. Health and wellness programs can incentivize healthy behaviors by offering rewards to program participants. C. Health insurance companies cannot collect any personal health information from participants in a voluntary wellness program. D. The purpose of health and wellness programs is solely to reduce healthcare costs for the insurance company. The correct answer is B. Health and wellness programs can incentivize healthy behaviors by offering rewards to program participants. Health and wellness programs offered by health insurance companies are designed to encourage healthy behaviors among plan members. These programs may involve educational resources, fitness challenges, or health screenings. Participation in these programs is typically voluntary, but some plans might offer incentives to encourage participation, such as premium discounts or rewards points. Option A is not true. Participation is usually voluntary. Option C is not entirely true. With participant consent, some health information might be collected for program design or tracking purposes. However, privacy regulations apply. Option D is partially true. Wellness programs can help control costs, but they also aim to improve member health. Question 120. An individual health insurance plan offered in New Hampshire covers prescription drugs. The insured submits a claim for a medication that requires prior authorization. According to New Hampshire regulations, which of the following statements is true regarding prior authorization for prescription drugs? A. The health insurance plan must automatically approve all requests for prior authorization. B. The insured's physician is responsible for obtaining prior authorization from the insurance company for the medication. C. The insurance company can only deny a prior authorization request if a generic alternative is available. D. Prior authorization is only required for high-cost medications on the health insurance plan's formulary. The correct answer is B. The insured's physician is responsible for obtaining prior authorization from the insurance company for the medication. Prior authorization is a process used by some health insurance plans to manage medication costs. It requires the prescribing physician to get approval from the insurance company before the plan covers a specific medication. The physician typically submits information justifying the need for the medication, and the insurance company reviews the request based on plan criteria. Option A is not true. The insurance company has the right to review requests. Option C is not always true. The insurance company might consider other factors besides generic availability. Option D is not necessarily true. Prior authorization can apply to various medications on the formulary or even non-formulary drugs.